record. So you can click pause recording.
Okay, sir. And now I'm just going to the YouTube live, sir. That is private live.
Okay.
We can again broadcast it at a later point of time.
Okay.
That has been done. Now that no other recording is there, sir. Now record I have to start here.
Hello.
Yes. Now both the recordings are there, sir.
Okay.
Sir, another 3 minutes will start, sir. Shirin Garu, are you
Yes.
ready with the sir bio?
Sir, opening మీరు ఇస్తారుగా ప్రొఫైల్ ఒకటి చదవాలి.
ఓపెనింగ్ నేను ఇచ్చేస్తాను. నేను ఇచ్చేసి మీకు షేర్ చేస్తాను. లేకపోతే మీరు స్టార్ట్ చేస్తారా?
పర్లేదు.
ఓకే, నేను స్టార్ట్ చేస్తున్నాను.
ఓకే.
Sir, in another 1 minute we will go on live, sir.
ఇంకోట లేదా రెండోది ఏడా లేకుంటుంది కదా. దారం తెల్లదారం ఉంది. పని చేస్తుందా? చెప్పలంటే పని చేయదా?
గారు వెయిటింగ్ రూమ్ అప్రూవల్స్ చూడండి సార్ ఒకసారి.
I'm taking care. No issue. So the meeting is about to start. Very good evening, ladies and gentlemen, and my dear members. Welcome to the virtual CPE meet on accounting standards by our renowned resource person, Chinnaswamy Ganeshan sir from PwC. Sir, today actually we are promised to have with us as a chief guest, but due to the immediate urgency, he has held up with the institute work from 5 to 7 o'clock. He has promised us to join in the end of the session, so he will deliver his message on the accounting standard as a accounting standard board chairman. He will deliver his message at the end of the session. So I request everybody to kindly stay back till end to listen to him. Thank you very much, Chinnaswamy Ganeshan sir, for accepting our call. Though in spite of your hectic schedule, I know that the things are because this corporate audits are going on. and I know how busy you are. Thank you very much for the same. Dear members, as you all know that accounting standards and audit standards and auditing is very, very important. More particularly accounting standards for SMEs, because everybody is giving much importance to the SMEs as far as the accounting standards is concerned. I request everybody to kindly patiently listen to our resource person so that it will add this thing. Thank you very much. I request now our secretary Shita Shireen ma'am to introduce our resource person Chinnaswamy Ganeshan sir. Over to Shireen ma'am. Thank you.
Thank you, sir. I am very glad to introduce our today's speaker, Chinnaswamy Ganeshan sir. He started his practice as a chartered accountant in 1988. He was in personal practice till 2005. He then served as a director in Lovelock and Lewis network firm of PwC for 6 years and as a partner in BSR and Co. LLP network firm of KPMG for 6 years in the audit practice. He was the lead partner for many Indian and multinational companies and carried out audits advisory on international financial reporting, taxation, due diligence, and other assurance services. He is presently the senior partner and head of audit and assurance of Messrs. CN, GSN and Associates LLP, Chartered Accountants, Chennai, a firm with 10 partners and around 120 team members. And he specializes in financial reporting, including Ind AS, IFRS, and US GAAP, and company law matters, and audit and taxation, and is a recipient of the Jewel of India Award for his role in financial services and Certificate of Excellence for his contribution in the field of financial services by the International Business School. He has presented 850 plus papers at various seminars, workshops, and conferences, both in India and overseas, on these specialized subjects. He has assisted 61 plus companies on Ind AS IFRS in India transition. He has also authored a quick referencer on IFRS with model question and answers. And the revised Schedule 6, Ready Reckoner, and Ind AS quick referencer, and Ready Reckoner for financial statements under Schedule 3 for the Companies Act 2013. And he is closely associated with the ICAI and is a guest faculty for all its 5 regional councils. He is presently a co-opted member of the Accounting Standards Board of ICAI and Ind AS Transition Facilitation Group. He was a co-opted member of the Ind AS Implementation Committee of ICAI and the Auditing and Assurance Standards Board of ICAI. He is also associated with many Chamber of Commerce like CII, FI, CCI, and ASSOCHAM, and universities like University of Madras, Annamalai University, and Lalila Institute of Business Administration, and Madurai Kamaraj University and Vivekananda College, and also other staff training colleges of RBI, C&AZ, and other banks. He is advising many boards of Indian and multinational companies and is presently an independent director in board of directors of Railtel Corporation of India Limited, a mini Ratna public sector undertaking under Ministry of Railways. He is presently the co-opted member of Executive Committee of Institute of Directors, Chennai, and Board of Studies of the Department of Commerce of University of Madras, and Board of Studies of Department of Commerce of Tyagaraja College, Madurai. With this brief introduction, I request our speaker to present on the topic. Thank you.
కాదు వాళ్ళు లింక్ పంపించారా మీకు
Thank you. Thank you very much, the chairman of Vijayawada branch, the secretary, and the office bearers for requesting me to do a session which is very dear to my heart, which is basically my specialization area, accounting standards. Whenever I was looking at accounting standards, especially with respect to small and medium practitioners, the challenge is whether the applicability of accounting standards is really required, or we can just withstand with our normal practice of doing only the income tax level work. But when we are looking into the applicability of accounting standards, what we have actually seen is that even if you are doing only a tax audit, or even if you are doing only a audit for the purposes of enabling your client to give the financial statement to your bankers. So in that situation also, there is a requirement that you have to comply with the accounting standards. unfortunately, many of us are feeling that the accounting standards are applicable only for companies. And to that extent, if I'm not doing an audit of a company, it is not required for me to look into the accounting standards applicability at all. So accordingly, when the audit season is now going to come, and when the audit season is also going to be for the tax audit as well as for small and medium companies audit, the correct and relevant discussion today will be whether the accounting standards will be applicable to small and medium companies, non-corporate entities, and if so, what is the level of applicability? And if it is applicable, what we are actually going to, are we ready for using the applicability of the accounting standards and comply with the accounting standard to ensure that no regulator at no point of time is going to ask us why you are not documented or why you have not reported in your audit opinion that when the company has not complied with, or the non-corporate entities have not complied with the applicable accounting standard, why your audit opinion is clean. Even if you are talking about a tax audit opinion in Form 3CB, there could be a possible question which may come where they will be talking about that why you have not complied with the relevant accounting standards. It's very common nowadays. The regulators are simply referring that in case of any non-compliance or something like that, to the disciplinary committee of the institute, and it becomes a big challenge for us to defend our case at a later point of time. So accordingly, this session, as suggested by your chairman, is to enable you to understand the applicability of the accounting standard to manage the coming auditing the session, auditing season, where you will be doing both audit of companies, smaller companies, and you will be doing audit of your other non-corporate entities for the purposes of tax audit. So what we are trying to do today is to assess and understand what is the basics of accounting standards and how far it is actually going to affect the small and medium practitioners, that is from the point of view of the practicing chartered accountant. I'm only doing a small and medium practice, and whether I have to be serious about accounting standards compliance with for my client is one part. The second part is how I will ensure that the client is not being questioned for non-compliance with any accounting standard, even if he is a non-corporate entity, maybe a proprietary firm or a partnership firm. What could be the possible issues which may come, and how I am going to create an awareness with respect of my client. This is what the topic today, and this is what your chairman wanted to update your knowledge or maybe refresh your knowledge with respect to the accounting standards and how you can use it fairly when we are talking about the coming season of tax audit. So I'm just putting forward my presentation on the screen, and you will be able to see the screen. I think that, sir, you are able to see the screen, right, sir? The PowerPoint presentation?
Yes, sir. Yes, sir. We're
Okay.
able to see.
Okay.
Thank you. Thank you.
Okay. So the as I have said that whatever accounting standards which are applicable for small and medium enterprises or small and medium companies, I thought that talking theoretically will be not going to help. So accordingly, how to put the accounting standard into practice, and where we will normally make an error of understanding the accounting standard, and what is the crux of the accounting standard in case if it is applicable to you. That's the way in which I have structured. So our structure is like this. Our structure is like this. What you mean by an audit? Because if a financial statement is subjected to audit, it says that you have to comply with the requirements of accounting standards. So the starting point is audit. And what is audit and what is the expectation with respect to the audit? And what is the regulatory framework which says that an entity, maybe a non-corporate entity, or a small and medium company, or a big company, what is the regulatory framework within which we have to comply with the requirement of the accounting standard is the next important question which we are going to discuss. And interestingly, majority of our firms might have been peer reviewed, or because of the second phase of the peer review, even when we are doing an audit of only tax audits, we are supposed to get our firm peer reviewed. And in case if it is a peer review, what is the interplay between peer review requirement and the accounting standards? What is commonly coming as a comment when our firm is being peer reviewed and the peer reviewers are trying to observe what are all the issues relating to the way in which we are carried out audit. So we will look into that peer review and the applicability of accounting standards when peer review has been commenced with respect to your practicing unit. Another important point, whenever we are talking about accounting standard, we simply believe that accounting standards is for doing company audit. Accounting standard is nothing to do with my tax audit. So I will do tax audit and I will go with the form, filling the form 3CD and reporting in form 3CB. And I need not even worry about whether accounting standards are relevant to me or not. Relevant to me means relevant to our client or not. So we normally have that type of mindset. Maybe we have been tuned to that mindset that accounting standard is not important. As long as we are okay with the income tax law and as long as we are taking care of the income tax requirement, that's enough. Why should we worry about the requirement of accounting standards? Because I'm a small time practitioner. That is what we normally have in our thing. Okay, I think that my voice is clear, I think, sir. My voice and video is also clear. Only
it's okay, sir, but think a small disturbance is there because of the overcast conditions. Kindly go ahead, sir. No issue.
Okay.
Video is fine. Even audio is fine.
Okay. So we will discuss about the tax audit and the related accounting standard as well, because that will be helpful for you when you are doing your tax audit in the coming season. The next point which I was thinking about is, whenever you ask about the applicability of a section of the Income Tax Act or the GST related provisions, we are always upfront because we believe that that is our bread and butter. That practice is our bread and butter. Whereas when we are talking about accounting standards, people are little worried about accounting standards is a complex subject. Accounting standard is very difficult to implement. And accordingly, how I will be able to verify the compliance of the accounting standards in respect of the client's situation. This is normally a worry which will be in the minds of small and medium practicing units. What we are planning to do is that we will try to tell you what is a simple and practical approach. What is the audit report considerations arising out of the accounting standards? We will look into that practical approach as well for tax audit as well as for normal audit. For audit of a company, audit of a non-corporate entities. We will give a special focus for small and medium companies under the Companies Act. Similarly, we will give a lot of special focus for non-corporate entities because most of our practice will be on servicing SMC client, small and medium company clients, and our practice will be majorly on serving the non-corporate clients on tax audit related matters. So let us will be focusing specifically on small and medium companies and non-corporate entities throughout the discussion. Even when we are going for a specific standards, we will discuss about the requirement of a particular accounting standard vis-a-vis what is the requirement for a small and medium enterprises. And when we are talking about the compliance with the accounting standard or non-compliance with the accounting standard, what the Companies Act says, what other regulators are saying, and if so, if I am having a responsibility to actually give an audit opinion, don't think that only audit report is an audit opinion. Even Form 3CB is an audit opinion. If you look into the structure of that, you are actually giving an audit opinion with respect to fair presentation of the state of affairs of the business and the profit or loss for the particular year. Okay, so that should also be part of our discussion. So we will see how the compliance or non-compliance with respect to accounting standards will have an impact on your audit report, and what are the things which you are supposed to consider. And again, finally, we are going to look into select accounting standards, not all the accounting standards, select accounting standards. And in the select accounting standards, specific issues relating to small and medium enterprises and small and medium companies, and what is the impact when you are doing your tax audit. What I'm trying to do is that I'm trying to compare the provisions of the accounting standard vis-a-vis what is the requirement as per income computation and disclosure standard. Because what happens is, if the accounting standard prescribes a separate accounting treatment and you have done your accounting based on that particular accounting standard, but the accounting treatment is totally different when you are coming to income computation and disclosure standard, what is the adjustment which you have to report as part of class 13 of the form 3CD? That will also be discussed as part of our discussion today. This is a structure. And what I will encourage you is that if you are having any questions at any point of time, you can post in your chat box, and the organizers will allow me to answer those questions after the end of the session. I will take all the questions at the end of the session. In case in between some questions are relevant, I will pick up those questions also and I will answer, because I am able to access your chat box also. So you can go on posting your questions on the chat box. With that, I will go into the fundamentals of the definition. What do you mean by an audit? When we are talking about what is meant by an audit, this is the definition of an audit. The definition of audit is not for company. It is for any audit. So that is what importance. I'm not picking up what is the company audit. So if I'm only talking about company audit, the focus shifts only to company audit, right? So we are trying to find out what is meant by an audit and what is the expectation from an independent chartered accountant when he signs the financial statement in respect of an audit which has been conducted by him. So that is what is normally being required to be understood, and we will try to think about that particular aspect. What the definition says an audit is an independent examination. Okay, that means we should be independent of our audit client. One of the possible questions which will be coming to our mind is that I also help the client in certain specific areas, like helping him in filing his return of income, helping him in filing his GST returns, reviewing the books of accounts which has been produced to me in Tally backup, and I am doing validation of that entries, and sometimes I post certain entries in addition to the entries which has been done by the client. Whether that will impact my independence with respect to an audit, my suggestion is just go ahead with looking at the new code of conduct. I think that there is a session tomorrow on new code of conduct, where how the auditor should maintain his independence with respect to an audit. Client should be totally different and the auditor should be independent of the audit client. That is the reason why we are saying, suppose if I am doing an audit of a particular company, and in that company, my close relative is a finance manager, there could be a possible conflict when I'm talking about a company. Similarly, when we are doing a tax audit, it says if your client is your relative and you are doing the tax audit, there could be a biased view which will exercise, and that is what we are saying, and the independence of the auditor is being impacted, or there could be a biased opinion. So accordingly, it is expecting that the auditor should be an independent, and he does an independent examination of what? The financial statement. Financial statement, when we say, it may be, whenever we are talking about financial statement, normally components of financial statement is what we are talking about as the full set. For example, a component of financial statement includes balance sheet, profit and loss account, cash flow statement, if it is applicable to that particular entity. Maybe for companies, there are some exemptions available for small and medium companies. For small and medium enterprises, non-corporate entities, maybe cash flow statement will also apply. We will look into the applicability of cash flow statement, because sometimes we are questioned why you are not attached the cash flow statement, whereas as per AS3 relating to cash flow statement, it is mandatorily applicable to your client, even for a non-corporate entity. Okay, so we will look into that components of financial statement. Of course, the next one is your notes and accounts. In coming to the notes and accounts, there is always one question which we are having in our mind, is that the notes and accounts, what is required for tax audit is different. What is required in respect of a company is different. But let me put you into the correct perspective. When you are talking about the notes on accounts with respect to a non-corporate entity or with respect to a non-corporate entity, in both the scenarios, you are supposed to have the minimum requirement of notes. That's a disclosure in accordance with the applicable accounting standards over and above what is required by the law. So that means the moment you are saying that for a non-corporate entity which you are auditing and you have the requirement of disclosure, you should see what is the disclosure requirement as per each of the accounting standard. But normally what we do is, when we do a tax audit, we give the disclosure only with respect to the income computation and disclosure standard. Of course, if you see the part of the class 13, if I'm not wrong, it's class 13F, which is requiring you to disclose the various matters in accordance with income computation and disclosure standard. That clause says what is the requirement which is specific to the particular income computation and disclosure standard, what is a general disclosure. I used to give in all my clients' scenarios the general disclosures as part of the financial statement, because it has to be a component of the financial statement. And then if the disclosure is already covered and the same disclosure is required in income computation and disclosure standard, I cross-refer to the note forming part of the financial statement, and other specific disclosure in accordance with the ICDS will be added as part of the other requirement. That's the way in which I normally give. I will suggest you also to follow the same principle. Maybe at a later point of time, because we will be having some sort of discussions on the accounting standards and auditing, which will be applicable, which you are going to have at a later point of time in the third session. And in case if I'm doing some other session, because I'm going to do a session for SARC on 27th on the audit report related matters. When I'm preparing some matters which are a specimen format, I will try to send to your branch also. Maybe that can be circulated to all your branch members to enable you what could be the specimen format of a financial statement, even for a non-corporate entity, which is going to report in accordance with ICDS and what is the compliance relating to the accounting standard. I will prepare some specimen format and I will send it to you, which can be circulated to all your members and all the participants as well. And again, when we are saying independent examination of a financial statement, of whom, which entity? Interestingly, the definition says any entity. That is where we are getting into the clutch of accounting standard. When we say independent examination of financial statement of any entity, that means it may be a corporate, it may be a partnership, it may be a proprietary unit, it may be even a non-profit undertaking. Because any entity, we are adding the factor that whether profit oriented or not. So we are not worried about whether it's a profit-making entity or non-profit making entity, or it is only a charitable organization, because it's a NPO or NGO, whatever you call. And even if it is not profit-oriented entity, you are doing an audit and you are going to express an independent opinion. And interestingly, it also uses the word irrespective of its size and legal form. Meaning what? It may be a small company, it may be a small partnership, it may be a small proprietorship, irrespective of the size. Maybe one partnership will be having 50 crore of turnover, another partnership will be having only say 1.5 crores of turnover. But your audit remaining to be the same. Audit is an audit is an audit. That's what we normally try to tell to all the people. Your perspective of an audit remaining the same. Only thing is what type of compliance rigor. That means what is applicable to a bigger entity, what is applicable for a smaller entity, what type of exemptions and exceptions which we can have. That is the only difference which we have to consider. Otherwise, audit is an audit. Okay, irrespective of the size or the legal form. And why you are doing the audit? It says when such examination is conducted with a view to express an opinion. That means if you are giving an audit opinion, you have to follow certain principles. So arising out of this definition, what we have seen is basically we are trying to see that one, independent examination by the auditor on the financial statement of any entity, activities, whether profit-oriented activities, industrial activities, commercial activities, or non-profit motive activities, size, small company, big company, small partnership, big partnership, proprietary unit, small size, big size, size with any size, and any legal form. Any legal form, when we are saying, it may be even a company or a non-corporate entity. Nothing is our consideration. So everything should be taken into consideration. And of course, it also says the idea or the reason why you are conducting such examination is to express an opinion on the financial statement, right? In that case, you are going to express an independent examination and giving an opinion on the financial statement. This is the definition. Now, if you see this definition and whatever explanation I have given, you will now have a clarity on the applicability of accounting standard. First thing is, any audit, you have to look into certain financial reporting framework. When we are saying financial reporting framework, what is the basis in which a particular asset or liability is coming into your financial statement? What actually gives the guidance? Normally, accounting standard gives the guidance. For example, if I'm saying I purchase a plant and machinery, and that plant and machinery has been capitalized in my books of accounts, why not I charge it to P&L account? Why should I capitalize and show that as an asset? The simple reason why we are doing it is that there is an accounting standard which gives a guidance. If a particular expenditure incurred is going to have future economic benefits by use of that particular asset, then it is qualifying as an asset. If it qualifies as an asset, whether it has to be treated as property, plant and equipment, or it has to be treated as intangible asset, then it comes with another explanation. If it has a physical substance, it is property, plant and equipment. If it is not having a physical substance, it is an intangible asset. I have used the word, it generates future economic benefits by using the asset. When I'm using a similar concept, for example, if I'm talking about inventory, AS2, when I'm talking about inventory, whatever purchases, why I am not debiting to expenses? Why I am bringing in what is the closing stock? Because the closing stock is capable of being sold only at a subsequent point of time. So it also brings in certain economic benefits, but it goes into your profit and loss account as part of your cost of goods sold. That's the reason why it is not forming part of your balance sheet as a property, plant and equipment, even though it has a physical substance. So we look for knowingly, unknowingly. That's what I wanted to tell you, everyone here, is that when you are looking for whether I have complied with a particular accounting standard, I missed to comply with that particular accounting standard, I will tell you that 95% of you knowingly or unknowingly might have complied with the accounting standard. It is in our DNA. So when I'm saying that, you will be surprised how you are saying I have not even understood certain accounting standard, how you are saying that it is being complied with. I will tell you that whatever we do, the common sense says that whether this particular item should be treated as a inventory or treated as a property, plant, equipment, treated as an intangible asset, are treated as a repairs and maintenance expenses. How we are concluding, this is a one is a common sense. The second is what is the business practice, and the third is what is the taxation principles, and the fourth is our own experience and expertise. With all the past experience, whatever we do in accordance with our common sense, if it is codified, that is what your accounting standard. That's what I used to tell all the people whenever I'm making a session. This particular common sense and codified common sense will come as part of the discussion. For a simple reason, a lot of people used to say that understanding accounting standards is a complex situation for small and medium practitioners. I always look at them with a laugh. So how you can believe that you are great and others are not great? I am a professional. And even if I'm doing an audit of a small and medium practitioners, I know what I am supposed to do. That supposed to do is nothing but your common sense and your experience, your what I should use your professional competency. That professional competency will guide you how you have to account for a particular transaction. When you have applied, just refer what is the relevant accounting standard. You might have done properly. That is the reason why I'm saying 95% of the cases inadvertently we might have complied with the requirement of an accounting standard. Nothing to worry. Whether you are a small practitioner, you are only a tax consultant, tax auditor, nothing to worry. You might have complied with 95% of that. That 5% gap which I am talking about is normally what we are supposed to do, supposed to discuss in this forum. That 5%, what I have seen is that some of the important concepts which has been specifically required by the accounting standards might have been omitted to be followed. Specific requirement. So that means key focus areas in every accounting standard could be there. Just to understand the key focus areas of that and how that key focus area will have an impact on your presentation of financial statement. If you are doing an audit of a company, how that key focus area will require a presentation and disclosure in accordance with the Companies Act. If you are doing an audit for tax purposes, in a tax audit, how the Income Tax Act is expecting that particular item to be dealt with. If there is any deviation, if there is a deviation, how I am going to deal with that? If you are able to manage that 5%, you will be 100% in compliance with the accounting standards when you complete your audit. That's what I have seen in my life. And that is the reason why I normally try to say that don't worry about compliance. It is also an interesting factor as part of your normal practice. Sir, I think somebody is having power to anecdote. So you can cut the anecdote power to all the participants. You can control it as the owner of it. So it can be enabled only for the presenter.
Yes, yeah, I have muted everybody, sir. I have muted everybody.
Okay. Otherwise, by mistake, it will go on happening. Okay. So this is, I just wanted to give you a complete confidence that what you are doing is in accordance with the accounting standards, knowingly or unknowingly. That's what I'm using as an inadvertently, you will be using it. What we have to do is put that into practice. Put that into practice when I'm saying that how I will be ensuring that whatever is required by the accounting standard has been fully complied with. This entire session which your chairman has asked me is to focus on practical aspects of complying with the accounting standard, especially by a small and medium practicing unit. Maybe you are a proprietary unit, or you are only two-partner chartered accountant firm, or maybe more than that also. In that case, how you are going to deal with the requirement of the accounting standard is what is the topic which has been assigned to me. Now, for that purpose, the additional thing which we have to understand is what is the regulatory framework within which your client falls. Based on the regulatory requirement, the applicability of accounting standards will change. We will look into that, how it will change and what is the difference between if the constitution of my or the setup of my client is a company, but as another client of mine is a non-corporate entities, how I will be able to find the differentiation between accounting standard for a company, accounting standard for a non-corporate entity, how we will understand this. Unless we know the regulatory framework, it is not possible. And after understanding the regulatory framework, I have a session where slide, 2-3 slides, where we will have a complete comparison of the accounting standards with a company and with a non-corporate entity, so that you will be having crystal clear understanding of when to apply which framework which you have to apply, and in that application, what are all the practical issues which will be coming in. So we will discuss that at length. When we are coming to the regulatory framework, I'm splitting this into based on the structure of the particular entity. What is the legal form of the particular entity? Assuming that if you are talking about unlisted company or private limited company, unlisted public company and private limited company. And under the Companies Act, you know that if a private limited company is a subsidiary of an unlisted public company, that will also be considered as a public company. So whether it's an unlisted private company or unlisted public company, there is set of accounting standard rules or framework which we have to look into. That is basically comes out of the Companies Act 2013. So there are two areas where you have to focus. One is, what is the director's responsibility with respect to compliance with the accounting standard? In fact, the directors under section 133 of the Companies Act, the accounting standards have been prescribed. So 134 subsection 5 of the Companies Act requires the directors to give you a confirmation that whatever is the accounting standards which are applicable, they have been complied with by the particular company in the preparation and presentation of financial statement. If you have seen in the director's report, there is one clause where we will say the director's responsibility statement. In that section, the director has to specifically confirm that applicable accounting standards have been complied with. When you advise your clients who are in private limited companies and small unlisted companies, in those cases, ensure that the client is also taking care properly the reporting requirement as per section 133 and 134(5). 133 is actually talking about accounting standards notified under that particular section. Auditors are required to give their opinion under section 143. When we are saying that the auditors are required to give an opinion under section 143, there is one specific requirement where it says 143 subsection 3, you are giving some 5 confirmations. One of the confirmations saying that the financial statements referred to in our report are in compliance with the accounting standards specified under section 133 of the Companies Act. So that means if you are doing an audit of unlisted company or a small private limited company, you have to necessarily ensure that the director's report also gives a confirmation. The auditor specifically tested the compliance with the accounting standards. If it is not in accordance with the accounting standard, the auditors has to identify what is the deviation from the principles given in the accounting standard. If the deviation is significant or material, you are supposed to give a qualified audit opinion. So the relating to the standards and auditing, I think Joman George is going to cover on day after tomorrow. So accordingly, I am not getting into the standards and auditing. Only requirement is under the standards and auditing, when you are giving an audit opinion, you are supposed to consider the requirement of the accounting standards. Any deviation which is significant, the auditor should think about qualifying his audit report. This is the regulatory framework as far as unlisted companies and private limited companies. And of course, the last one is very important. As per the code of conduct of the institute, you have to necessarily comply with the technical standards. Technical standards issued by the institute, technical standards issued by the regulators should be complied with. If there is a variation in the compliance with the technical standard, you are considered to be negligent in doing your professional duty. That means when I'm saying that you are negligent, you may be questioned for disciplinary actions. You may be questioned by the regulators. And this code of conduct underwent a change. And my understanding from your chairman is they have beautifully structured a session for tomorrow to discuss on what is the code of conduct 2019 and what are the important precautions you have to do when you are accepting a client, when you are doing an audit, when you are reporting, what are all the things which you have to take into consideration. So tomorrow the code of conduct will also talk about what is the requirement. When you are talking about the requirement, one of the requirement comes to compliance with the accounting standard. That's the regulatory framework. And when you are talking about a listed company, assuming that one or a few of you are actually doing audit of listed companies, in fact, the pressure now is to close the entire audit by the end of 30th June, because the SEBI has not extended the timeline beyond the 30th June. It has extended only by 1 month. So we have hardly another 7 days to complete the listed companies. As your chairman has pointed out, I'm in the midst of doing a listed company audit, which has to be closed out. And when the request comes to talk about accounting standard, 2 reasons why I have accepted. The first thing is, it is to talk with my own professional colleagues. I enjoyed the hospitality of Vijayawada branch very, very large time. I still remember that we started with a workshop on Ind AS implementation long back, maybe somewhere in 2008 or 2009. And that has set the foundation for my entire practice on Ind AS. So that is one reason. The second reason is that when I am discussing this particular point with your inputs, my knowledge will also get enriched and it will help me in my audit season. That's the 2 reasons why I have accepted, even though there are a lot of pressures to complete certain audits at this point of time. In a listed company situation, what is your legal framework is whatever Companies Act which we are talking about for unlisted companies and private limited companies. Apart from that, the listing agreement which the entity has signed with the stock exchanges, we call it as a SEBI listing and other disclosure requirement rules 2015, which has been amended from time to time. Those listing agreement, class 41 is what we used to say. There is a requirement how the financial statement should be prepared and presented by listed companies. That is also focusing on the requirement of the accounting standard. That's the reason why SEBI listing agreement is also one of the important aspects to be considered by listed companies. ICA code of conduct anyway is part of the requirement for any audit which you are doing as a practitioner. And the third is an important topic. Of course, the second I can say that it may not be an important focus today. The first and the last one will be of an important focus for all of us today. Non-corporate entities. When I'm doing an audit of a non-corporate entities, what is a legal framework? What is a regulatory framework? Why I should worry about too much on compliance with the accounting standard? The first thing, it is depending upon whether audit is mandatory. If an audit is mandatory under any law, then there are some guidances whether accounting standards will be applicable to you or not. We will discuss that at length when we are coming to that particular portion of our discussion. So depending upon that, for example, if you are doing an audit under the Companies under the Income Tax Act for tax audit purposes, then the Income Tax Act requires you certain principles. And the preface to the accounting standards suggests you that these are all the things which you have to follow. So that regulatory framework comes only if audit is necessary, mandatory. Suppose we are not doing an audit. We are simply taking the trial balance, convert that into a balance sheet and P&L account, and we are saying extracted from the books of accounts produced to us. That means we are indirectly saying it's only a compilation of work. I will come to that a little later. We are not giving any audit opinion for the bank purposes. So whether that is an audit, in that case, whether the accounting standard has to be followed, it's a question mark. We will look into that in detail. Okay. The second thing is ICA code of conduct for auditors is always there. Okay. So it depends upon really audit is required. If audit is not required, accounting standard is not required. I put it in a simple term, right? Because non-corporate entities, it simply says If it is subjected to audit under any law, then only you will proceed to the next question. If it is not subjected to audit under any law, accounting standards are not applicable to non-corporate entities. The only question which we are having in our mind is that whether tax audit is audited under any law. Okay, that we will look into that little later. Don't worry about it. We will in detail we will discuss about that particular situation. Now, the next point which we have to talk about is that okay. So what I am supposed to look into is to see whether I am going to discuss about an audit. When I am talking about an audit, whether it is for giving an accounting opinion, right? Or audit opinion. When I'm saying audit opinion is being given, we normally think about giving a true and fair view consideration with respect to the audit of a particular enterprise. The financial statement related discussion, which is what we normally give as part of our discussion. Let us look into the true and fair view connected with the audit and also the accounting standard. The true and fair view is a fundamental concept relating to an audit, that you are very clear, right? Whenever we are giving an audit opinion, we normally give an audit opinion, and that audit opinion says that you will be explaining whether the financial statements are giving a true and fair view of the statement of affairs, financial status of the particular company or a non-corporate entity, or what is the performance during the year, that is a profit or loss for the year, and what is the cash flows, if the cash flows statement is applicable to you. You look into all these three aspects and then you make a comment. So it's a fundamental concept of an audit that you should always look into whether true and fair view has been taken into consideration or not. Okay, so when we are discussing this, what is the true and fair view which we are actually giving an opinion? Even if you look into Form 3CB, you will be talking about true and fair view. That is the reason why I'm saying, don't think that audit opinion means it's only for a company. Even for Form 3CB, it is an audit opinion. Because if you see Form 3CB, the headline itself, it says that where the assessee is not audited under any other law. That means I'm not, it is not a company. So accordingly, no Companies Act audit has been done. So if that has been done, you will use Form 3CA. In case if it is not audited under any other law, then you have to use Form 3CB, because Form 3CB is an accounting opinion which you are, audit opinion which you are actually trying to give for the true and fair view of the balance sheet, of the profit and loss account, and all other affairs which you are talking about. What is this true and fair view which we are expressing an opinion in the balance sheet? With respect to the balance sheet, I should say, the state of affairs, whether the balance sheet, whatever is disclosed as part of the asset, whatever is disclosed as part of the liability, whatever is disclosed as part of reserves and surplus, whatever is disclosed as part of the capital, share capital, whether they have been fairly presented. That is what state of affairs, assets, liabilities, and the shareholders' funds, whether it has been properly presented or not. When we are talking about statement of profit and loss or profit and loss account, whether the profit or loss for the period has been properly presented or properly determined and presented. When I'm saying properly determined and presented, there comes the requirement of the accounting standard, even for a non-corporate entity. For example, if I'm talking about making a provision for employee benefit, gratuity is one of the important aspects for employee benefit. So have you considered the requirement of making a provision for gratuity in accordance with the requirement of accounting standard 15? Becomes one of the question mark whether your profit or loss for the period has been correctly determined. And of course, provision for gratuity will subject it to 43B, that we will consider as part of your computation process. But in determining your profit or loss for the period, you should have complied with the accounting standard. Then only you can say you have followed a true and fair view. That comes as part of your profit and loss. Statement of cash flows are not applicable to non-corporate entities only if there is a threshold limit. We call it as a level 1 entity. Level 1 entity will be explained separately for you. In that case, cash flow statement should also be mandatorily prepared and presented, even if it is a non-corporate entity. For a company, there is an exemption. That exemption says that if it is a small and medium company, like a small and medium enterprise in non-corporate entity case, you need not follow, you need not present cash flow statement as a component of your financial statement. The requirement also comes, the true and fair view also comes out with section 128 subsection 1, which says that an entity should prepare and maintain proper books of accounts. The books of accounts has to be prepared and maintained in accordance with the requirement of the accounting standard. For example, when I'm saying the entity is maintaining books of accounts and it's maintaining its inventory, whether the costing for inventory has been in accordance with accounting standard 2, AS2 for inventory, that also forms part of your compliance requirement under section 128(1) for preparing and maintaining the books of accounts by an entity. Second is section 129 subsection 1 specifically says, have you complied with the requirement of the accounting standard in the preparation and presentation of financial statement? Have you complied with the various forms which has been prescribed? When I'm saying various forms which has been prescribed, one of the form, what it talks about is your format of the financial statement as given in schedule 3. Have you complied with the requirement of schedule 3? Whatever is the disclosure, whatever is the notes required as per schedule 3 has also been complied with. Interestingly, the presentation and disclosure requirement of schedule 3 is over and above the requirement given by the accounting standard. So you have to comply with the accounting standard, you have to comply with the requirement of schedule 3, you have to comply with the requirement of Companies Act 2013. All put together is what is your presentation and disclosure requirement. Okay, so that is also has to be considered to ensure true and fair view. And lastly, with respect to true and fair view, auditor has a responsibility to check whether the financial statement contains a true and fair view or not. When looking into that particular aspect, whether it contains a true and fair view or not, the auditor looks into mainly two aspects. One, whether the presentation and disclosure in accordance with the particular accounting reporting framework. And I'm saying accounting financial reporting framework or accounting reporting framework is nothing but have you complied with the particular accounting standard which is applicable to the particular client. That's one important aspect which we are looking for. The another aspect which we have to look for is that whether the related disclosures have been made. When you take the session on standards on auditing, there is a possibility that they will discuss about when the auditor is expected to qualify your audit opinion. It says where the accounting standard is not followed for the preparation and presentation of financial statement, also you will qualify if there is an error. But if there is a major disclosure which is required but it's omitted, then also you will qualify. That is what the standards on auditing is requiring you to do it. So auditor verifies the true and fair view with all these things in mind. That is the important point for us to understand. Now, I'm just trying to bring in the concept of our peer review board. The peer review board, as I have already explained, covers even the practicing unit which are only doing tax audit assignment. You are not doing anything other than tax audit. And if you are doing a bank branch audit also, now they are asking whether you have been peer reviewed or not in the form, right? So the understanding is if you are peer reviewed, your quality of the audit has been ensured. when you are talking about quality of the audit being ensured, you might be complied with all the financial reporting framework. That is exactly is what the peer review board is talking about. So it covers even the practicing unit, and the statement of peer review issued by the institute says the practicing units should be complying with all the technical standards issued by the institute. When I'm saying technical standards issued by the institute, we will look into that. What are all the technical standards which is covered? Another point which I wanted to tell you is that the peer review is applicable only to the practicing unit. That is from the point of view of the auditor and not from the point of view of the client. Client doesn't have any responsibility with respect to peer review. But we are having a specific responsibility with respect to peer review because we are covered by the code of conduct, right? The peer review is also one of the requirement of the code of conduct. So compliance with the technical standard, and what is the quality of the audit report which you are actually giving. Okay. Sir, my audio is clear. Maybe you may be giving certain, maybe an issue with respect to that.
Sir, you go ahead, sir. Audio is clear, sir. No
okay,
problem.
Okay.
To some computer.
Maybe for them, the computers may be having
internet signal is so weak.
Could be possible. So what is the quality of your audit report when you are issuing an audit opinion? As an independent examiner, you are issuing an audit opinion. What is the quality which you have maintained with respect to that audit? This is the two areas which is focused by the peer review. And when they are talking about the compliance with the technical standard, they are saying not only accounting standard, that's what important for you. Accounting standard comes as the first item of compliance. So that means an entity which is practicing unit, when giving an attest function as an audit opinion, should ensure the compliance with the accounting standards, and any deviation with the compliance with the accounting standard should be reported by the particular entity, by the auditor as part of his audit report. Okay, that is what is the first requirement. The second requirement is compliance with the various guidance note. This is one area we normally miss out. Even though we are saying only accounting standard, I should also tell you that there are cases where accounting, apart from the accounting standard, there are some guidance note which has been issued. For example, if you are doing an audit of a non-corporate entity, or maybe I can say that the non-corporate entity is a not for profit making entity, or an NGO when you are doing an audit, or NPO which you are doing an audit, you are not only required to comply with the requirement of accounting standard. It depends upon what is the activity which is carried out by the particular entity. But in respect of a non-corporate, not for profit undertaking, there's a guidance note how the audit should be done. That guidance note should be necessarily followed, right? That should be necessarily followed. That is also what is required. So apart from our accounting standards, you should also look into whether any of the guidance note issued by the institute is also applicable to the client's business or client's particular accounting treatment. If so, whether the client has complied with that particular guidance note, and you have ensured that the applicability of it. For example, minimum alternate tax accounting treatment is coming as part of a guidance note. Have you complied with that particular guidance note? Because that is relating to accounting. Auditing, a lot of guidance notes are there. For example, CARO, we have a guidance note. We have a technical guidance or advisory relating to COVID-19. Specifically, it has come out. So we are supposed to look into whether the accounting related matters have been taken care by the client. Accounting standards and guidance note compliance is by the client. And from our side, we should also ensure that we have considered the auditing and assurance standards, or standards and auditing, whatever name we call, that has been taken care. This is the complete requirement of the peer review. And in fact, peer review has come out with a lot of major observation. on the practicing unit, saying that this is missing, that is missing, you have not followed this, you have been commented, there is an improvement required, go and correct your practice, and then come back to us again for getting an updated peer review audit. So all these things are based on certain specific comments, and majority of the comments are relating to non-compliance with the accounting standards, auditing and assurance standard. Auditing and assurance standard, I'm not going to discuss. Accounting standards not complied with, but the auditor failed to report with that particular accounting standard non-compliance. That was a major observation which the peer review board is observing in majority of the peer review which they have done. The second thing is the auditor's report, when talking about the non-compliance, complying with that particular situation, it says either there is an improper reporting or inadequate reporting, or the statements containing inadequate disclosures but the auditor failed to report it. That's what I have said. Not only compliance with the accounting standard, all your financial statement, balance sheet, profit and loss account, cash flow statement, everything has been prepared in accordance with the requirements of accounting standard. But the related disclosure might have been omitted to be given in the financial statement, but the auditor has not pointed out that in his audit opinion. So that is also commented mainly. And auditor's report is concluded without, which is not supported by with judgmental points. But again, I'm not going to discuss this particular point because this is part of your compliance with standards and auditing, which will be on your third day of discussion. Now, this is also part of your standards and auditing. Whatever you have done, have you complied with the adequate documentation? Whether there is a mismatch with the work which you have done and what is you are having in your audit documentation, that is again part of the standards and auditing and nothing to do with accounting standards. So I'm not talking about this. These two items will be dealt with as part of the discussion on standards and auditing. Otherwise, I am actually encroaching the domain of another speaker. So I will stop at that level. And we will proceed on that. What arising out of it? One of the requirement comes very clearly to us that we have to comply with the requirement of the accounting standard. And the deviation from the accounting standard has to be reported in audit opinion. That's a simple conclusion which we have to talk about. Now the question comes is, if we are talking about a case where we are only doing tax audit, is it peer review is required? In fact, if you see the peer review process, they are specifically asking to select samples for tax audit assignments or tax audit engagements done by the practicing unit. With respect to the tax audit, have you shown the applicability of the accounting standards? Have you ensured that related disclosures have been properly made? Do you have reflected in your audit report, Form 3CA or Form 3CB, as the case may be, any deviation thereof? That is also part of the peer review assessment. When you select a sample for doing a peer review, when I do a peer review for the practicing unit, mandatory requirement from my side is to select samples even for tax audit engagement. Okay, it's not only company audit engagement. In that case, if I am seeing that you have not done proper compliance, ensured proper compliance with the accounting standard, I'm supposed to comment that there is an improvement required. Unless you improve yourself and coming back to me, you will not get a peer review certificate at all. So equal importance is there for both audit as well as tax audit. Now, let us understand whatever we are talking about as the mandatory requirement of accounting standard, from where we are drawing that reference. I'm repeatedly using the word, no, tax audit, you have to comply with the accounting standard. Non-corporate entities also requiring compliance with the accounting standard. From where I am getting the answer, or where I am getting the guidance that it is required to be mandatorily followed. That is coming from what we call as a preface to the accounting standard. There is a separate document which is a preface to the various accounting standard which has been introduced, and that says, even if you are seeing the company's accounting standard rules 2006. It also contains a preface that talks about to whom it is applicable, where you can have an exemption. All those things will be coming as part of the preface. From that preface, I am taking some frequently asked questions for us to understand whether accounting standard is to be applied for a particular client, or I can simply ignore the requirement of the accounting standard. So I will draw from that particular situation. I'm just putting that into that. What is the first question which has been asked by the preface is that whether it is an entity. When I'm using the word entity, entity includes both corporates and non-corporate. Okay, whether the entity carrying on any business, industrial or commercial activity. Business means trading, industrial activities, manufacturing and selling, commercial activity is maybe you are doing a service and not any industrial activity, or you are not doing dealing with any product. That could be a commercial activity which you may do. If the entity is carrying on any business or industrial or commercial activity, if I answer yes, the next question which has been asked is whether they are preparing a financial statement which will be publicly available. When I'm using the word publicly available, I do a business, I prepare a financial statement which will be used only for me, but I'm not giving to any public for any public purposes. It is not available publicly. The only question which comes to us is that whether a financial statement which has been prepared for the purposes of submitting with the income tax department, is it a general purpose financial statement? The answer is yes. That is where we are get caught. An entity which is doing a business activity, for example, a partnership is only doing a trading activity. Because of that, they have to follow accounting standard, provided they prepare a general purpose financial statement. That general purpose financial statement is what you prepare for filing in support of your return of income. That is also considered as general purpose financial statement. So you are fulfilling both the conditions. And the third condition which they are talking about is it subjected to audit under any law? For example, I'm taking a partnership which is carrying on a manufacturing activity, and it prepares this financial statement for filing with the income tax department, but not having the threshold limit of tax audit. Maybe any other tax audit, when I'm saying not necessarily based on your gross receipts or turnover, but maybe in case of your 44 AD, AE, whatever section which we are talking about, if there is an audit which has to be mandatorily done according to section 44 AB of the Income Tax Act, we call it as a tax audit, right? Tax audit is done under the income tax law. So subjected to audit under any law. In our example, I'm talking about a partnership firm which is manufacturing goods and selling that goods, and it prepares its own profit and loss account and balance sheet for the purposes of filing with the income tax department. So it is a general purpose financial statement, but it is not subjected to tax audit because its turnover is less than 1 crore or whatever threshold limit, depending upon whether it's a service industry or 44 AD or 44 AE, any scenario. It is not subjected to any tax audit. Audit under any law. In our case, we are talking about it is not subjected to audit under income tax law. If I'm concluding that it is, even though it is doing a business activity, even though that partnership is preparing a financial statement for filing with the income tax department, but since it is not subjected to audit under any law, no requirement to consider compliance with the accounting standard. You are exempted from compliance with the accounting standard. So when I've said that you are not subjected to audit under any law, you are exempted. Now we take another case, a partnership firm which is carrying on a trading activity, only trading activity, purchase and sale of goods. And it prepares a financial statement which will be submitted along with the return of income or for the purposes of return of income, general purpose financial statement. And the turnover is beyond the limit which has been prescribed for tax audit. You are subjected to tax audit, and the tax auditor issues an audit report in Form 3CB, in that case, that partnership firm, irrespective of it is not a company, should also comply with all the applicable accounting standards. So non-corporate entities will be determined based on whether you are carrying on the business, industrial or commercial activity, or you are preparing a general purpose financial statement, and those general purpose financial statements are subjected to audit under any law. If any one of this condition is not fulfilled, accounting standard is not applicable. If all the conditions are fulfilled, you have to necessarily comply with the accounting standard, both in the preparation of the financial statement as well as in presentation of the financial statement. What is preparation of the financial statement? How you will account for an asset, how you will account for a liability, how you will account for an expenditure, how you will account for an income. That is your preparation of the financial statement. Presentation is how it has to be presented, and disclosure, what is the disclosure required, and that is also covered as part of this particular discussion. So if all the conditions satisfied, mandatorily, whether it is a corporate entity or a non-corporate entity, it has to cover or comply with the accounting standard. That's the reason why this particular session is talking about what is the how you will put it into practice for the purposes of ensuring the accounting standards as applicable to small and medium enterprises or small and medium companies, or you as an auditor from a small and medium practitioner ensure the compliance with the accounting standard. This is what is the first part of our understanding, the applicability of accounting standard. Then there are some questions which are coming to our mind. I have not done an audit. I'm only doing a certification. For example, export certificate is required. Or when I'm doing a foreign, when my client is doing a foreign currency remittance, I'm certifying forms 15CA. So it's only a certificate. I'm not doing an audit. Whether in respect of the certificate, compliance with the accounting standard is required. So this certificate is not a general purpose financial statement. When I'm saying financial statement, it should contain balance sheet, profit and loss account, cash flow statement if applicable, notes and account, full set of financial statement. Certificate is actually giving a high level of assurance that the particular point has been met or not met. So accordingly, for certification, we are not worried about compliance with the accounting standard. Having said that, suppose if the certification is talking about what is your export turnover. For export turnover, determining the export turnover, how you will determine the export turnover, you have to go to AS9. AS9 is talking about revenue recognition, whether it is a turnover and what point in which you have to recognize that as your sales. For example, in an export turnover, the moment I have raised the invoice, what is the prevailing forex rate at which I should record my sales? And subsequently, when I'm realizing it, there is a difference because of the forex rate on the date of invoicing and subsequent realization. That realization, some of these smaller and medium enterprises are used to account it as part of sales, which is incorrect. That is not sales at all. That should be treated as part of your other income or other expenses if there is a loss. And some of the entities, in fact, used to ask me that question. Sir, when we are recording the foreign exports, can we wait till the time of actual realization and then record it instead of having two entries? Unfortunately, AS9 is not permitting that particular aspect. AS21 relating to, AS11 relating to foreign currency accounting is also not permitting that. Depending upon what is the certificate you are going to give, whether the certificate relating to compliance with a particular accounting standard, it will define what is that particular treatment. So for example, when I'm saying you are going to give a certificate relating to, say, what is the total project cost which has been incurred up to this stage where the entity has taken a term loan and you are actually going to give a certificate of fixed assets installed, then what is fixed asset? What are all the items which are eligible for fixed assets capitalization? You should know, right? So to that extent, you have to look into that. If it is nothing to do with the accounting principle, but it is relating to some other items, you are not doing a complete audit. So compliance with all the accounting standards are not required at all for a certification. The next point which we can actually talk about is that compilation. This is normally being done, and it is a favorite topic for Joman George, who will be talking on the standards on auditing. So accordingly, he will explain in detail there. But I will tell you, when you are giving a certificate, this is very common. We are giving a certificate. A client comes and say, a partnership unit or a proprietary unit, sir, my bankers are asking for the balance sheet should be signed by the auditor. What we normally do, we simply put a seal. The seal says extracted from the books of accounts or from the books of accounts produced to us for so-and-so chartered accountant firm. What is the partner who is signing, his membership number, etc. All those things we will put and we will sign. In all the pages, we put our round seal, put an initial. This is a very, very common practice for a small and medium enterprise practicing unit to give a financial statement for the purposes of bank. Whether giving a financial statement for the purposes of a bank is considered as a general purpose financial statement. That is the important question. Strictly speaking, it is not a general purpose financial statement, because and accordingly, accounting with the compliance with the accounting standards are not required to be verified by the auditor. Only question which we are having, are we issuing an audit report for that, audit opinion for that? Compilation is not an audit opinion at all. We are only saying they have given a trial balance. I have extracted from the books of accounts produced to me and made it in a presentable form. That's what compilation. Compilation is not giving any audit opinion. But at the same time, in case if the bank is insisting that the auditor should give an audit opinion as well, that they are saying that you get an audit opinion also on this, other than tax audit, one-page audit report for non-corporate entities is there. It is in accordance with the standards on auditing. If they are asking for a true and fair view to be given along with the financial statement giving to that, your simple statement of extracted from the books of accounts produced to us will not help. You have to actually go for an audit. When you are doing an audit, is it required to be audited under any law? No. It is only for the purposes of giving to bank. And accordingly, non-compliance with the accounting standard is not an issue for the auditor at all. Apparently, if the guidance itself is incorrect, suppose if the particular accounting treatment is completely incorrect, then you can ask them to correct it. Otherwise, there is no requirement to comply with accounting standards when you are issuing an audit opinion to a bank without any audit under any law. It is only a certification that it shows the true and fair view. Okay, not required. Sometimes the bankers will ask for a limited review, or sometimes a regulator will ask for a limited review, not a full audit. In a limited review, it is not an audit. Review is different, audit is different. Audit is covered by separate standards on auditing. Limited review is covered by separate standards on limited review engagement. Review engagement, SRE is what we used to say, whereas here we will say SCA, standards on auditing. Standards on review engagement is totally different from standards on auditing. That itself shows that we are not carrying out any audit, and to that extent, there is no need for us to comply with the accounting standards with respect to a non-corporate entity. That's what I wanted to emphasize. Suppose if you are doing an audit, limited review for a company has to comply with that. The limited review normally being done for interim financial reporting. There is a accounting standard called AS 24, which talks about AS 25, interim financial reporting. But AS 25 requires that all the accounting policies which you will apply for the year end should also be applied for the interim financial reporting. That means accounting standard which you are going to comply for the year end reporting should be applied for even the quarterly results or half-yearly results, whatever you are doing. So if it is a company, then you are covered by section 133, and read with that 133, AS 25 will make you mandatory to comply with the other accounting standard. But if you are doing the work with respect to a limited review of a non-corporate entity, you are not actually subjected to audit under any law. So you are not covered by the requirement of accounting standard. Even though AS 25 for applicable to non-corporate entities also, very limited circumstances we will apply. Another thing which we normally do is some specific engagement. For example, an entity will ask you, a non-corporate entity or a company will ask you, can you physically verify all our assets along with our team and reconcile that with the fixed assets register? Give us the difference between the book fixed assets register and what is physically available. So that type of work is called an agreed upon procedure. What do you mean by agreed upon procedure? There is a specific item or component of a financial statement, not full item is being audited. Only few items are being audited. Only maybe in this case, only fixed assets is being audited. For doing that, we are not going to do a complete audit. We are telling that these are all the things which is required to be performed. What is performed? Physical verification will be done at each of the locations. The listing will be taken from the company. We will verify whether it is available. After that, it will be reconciled with the FA register. Discrepancy will be given as a report. So in an agreed upon procedure, we are not giving an audit opinion. We are actually giving factual findings which has been done, and accordingly, it is not considered as an audit. So for agreed upon procedure, accounting standards are not applicable. The agreed upon procedure I can actually extend to the other categories also. Stock audit. When you are doing a stock audit with respect to a bank work, or you are doing a revenue audit for a bank, you are doing a concurrent audit for a bank branch audit. All those things are coming as part of a agreed upon procedure, specific procedure which you have agreed upon, and you are going to verify those procedures which has been agreed with the client. So client, whatever is asked, we have agreed to perform those procedure, and arising out of that, whatever deviation, we report that. Factual findings, we will report that. That is what your concurrent audit, your inspection audit, your revenue audit, your stock audit, your fixed assets audit, even a forensic audit. In those cases, whether auditor has to ensure the compliance with respect to the accounting standard, maybe I can say that in fixed assets audit, bank may ask whether an item which is not eligible to be considered as your fixed asset has been capitalized. Could be one observation which you will do. For that limited purpose, you will look into the corresponding accounting standard AS 10. For stock audit, when your valuation is being also part of your comment, then to that extent, you will look into AS 2 for inventory to that limited extent. Okay. In doing a forensic audit, whether the revenue has been properly stated, whether the assets have been properly accounted for, whether the liability has been wrongly stated, for all those items, you will look into the related or connected accounting standard. It is not complete compliance with the accounting standard which you will be ensuring, because you are not carrying out an audit. Even though we use the word stock audit or forensic audit, it is a specific agreed upon procedure between the client and the auditor. To that extent, it is not applicable. Now we are coming to audit of not-for-profit undertaking. Not-for-profit undertakings, that is a charitable institution. When we are doing an audit for the purposes of filing with the income tax department, where the entity is actually getting exemptions under 80G or 12AA, and based on which they are actually not paying any taxes. So you are supposed to give your audit report in Form 10CB, right? It's a Form 10. So when we are actually giving that audit report also, whether accounting standard has to be complied with. Here, interesting point. In this particular situation, I am just going back to this particular aspect. What is the particular aspect? Whether the not-for-profit organization is carrying on any business activity, industrial activity, or commercial activity. Normally, a not-for-profit organization will collect donations and apply donation for charitable purposes. So to that extent, it does not carry any business activity, industrial activity, or commercial activity. But in majority of the cases, to engage the beneficiaries of the charitable organization. For example, if I'm running a old age home, or I'm running a home for underprivileged children, a home for underprivileged women, or I'm running a home for physically challenged people or differently abled personalities, to engage them and giving them a vocational training, it is normally possible that the NPO also carries out certain business activities or commercial activity. What that? The inmates will be manufacturing certain products. Simple examples which we can talk about is craft items, greeting cards, some of the household items like agarbattis or perfumes, or some of the cleaning equipments. All these items could be possibly a manufactured product of the inmates of a not-for-profit organization. But those are sold with a profit, right? At a profit. The moment that particular activity is being carried out by an NPO, even the possibility, even if the smallest work is, say 90% is only collection of donation, 10% is relating to this type of business activity or commercial activity, the guidance says that even if a smallest portion of the activity is business, industrial, or commercial, irrespective of your structure, it's a not-for-profit organization or a profit organization, you are fall into that bracket. So a charitable organization having even smallest portion of activity which is considered as business, industrial, or commercial, like whatever I have explained as an example. Then the next question which you are having is that, is it preparing a general purpose financial statement? It prepares a financial statement, and that is subjected to audit under law. Yes, that is being filed with the income tax department. So it becomes a general purpose financial statement subjected to audit. So that case, an audit of an NPO should also be in accordance with the accounting standard. The compliance with the accounting standard is also made mandatory for that type of NPOs also. So I think that I have covered whatever is the work which we normally do, whether compliance with the accounting standard is required or not. I have covered reasonably. Now we are coming to the tax audit and the accounting standard applicability for the tax audit. Let us put the question. Two questions which I'm having. The first question is, accounting standards are not applicable to tax audit. Is it a myth or it is a reality? Whether the statement is correct or not. Going back to our previous slide, where we have talked about the preface to the accounting standard, we started with the first question, whether the entity is carrying on any business, industrial, or commercial activity. Tax audit is applicable only if the client has an income from business, right? For other things, tax audit is not applicable. Even when we are talking about the deeming fiction of 44 AD or any other section also, we are looking for an entity which is having either business income or commercial income or industrial income from industrial activity. Even when I am saying I'm only doing a sale of services and I'm not producer, but it is also a business activity, right? Both business and professional income is covered. So to that extent, the first condition, entity is carrying on any business, commercial, or industrial activity is ticked off. That means it is fulfilled. So the next question which we are having in our mind is that next condition which we have to check is it preparing a general purpose financial statement? When you are filing a financial statement for income tax purposes, or it is going to be the support for your tax audit return, when the return of income in which balance sheet, P&L, everything has been uploaded, it is a general purpose financial statement. So the second condition is also fulfilled. The third condition is very critical. Are you subjected to audit under any law? Tax audit is an audit under the income tax law. So all the three conditions have been satisfied, and to that extent, any entity, whether it's a company or non-company, whether it's a proprietary firm or not for partnership firm, whether it is an NGO which is having business activity, in that case, we should consider that for tax audit, accounting standards are completely applicable, completely applicable. So all the applicable accounting standards should be complied with. Another question which we normally have in our mind, what our other question which comes to our mind is that when I do an audit, I have a specific requirement to say whether the company has complied with the income disclosure and income computation and disclosure standard, because Central Board of Direct Taxes has issued income computation and disclosure standard that should be used for the purposes of reporting in one of the specific clause, and that should be used for computing your business income, computing your professional income, computing for your income from other sources. So only for that limited purpose, I'm supposed to comply with the income computation and disclosure standard. Why should I worry about all other accounting standard? Because that is not going to be part of the Income Tax Act at all. Having said that, I wanted to tell you one important consideration for your understanding is that the specific point which we have to have it in our mind is that when you prepare and present a financial statement for your income tax returns under tax audit, first thing is that financial statement should be prepared in accordance with the requirement of the accounting standard. Then only clause 13 comes in. So the start point is, have you complied with the accounting standards? And those accounting standards, if you see what is the method of accounting employed, whether there is any change in the method of accounting employed compared to the previous year. If so, what is the deviation from there? All those things are talking about your accounting principles used. And those accounting principles are defined by means of the accounting standards. Then only you are coming to 145 capital A with respect to your stock valuation. And then you are having class 13, where you are talking about the compliance with income computation and disclosure standard. In case if there is a deviation between the accounting principle you have applied and what is the principle given in ICDS. If there is a deviation or difference, then you have to report it. So it is not sufficient just to comply with income computation and disclosure standards if the client is subjected to tax audit. If the client is subjected to tax audit, they have to first comply with all the accounting standard. That is what the preface to the accounting standards says, based on entity carrying on business, commercial or industrial activity, preparing a general purpose financial statement, and of course it is also saying that it is subjected to audit under any law. So accordingly, accounting standard not applicable to tax audit is only a myth. In reality, it should be applied in full. All applicable standards should be complied with. Now, because I have now started talking about accounting standards is applicable even for a non-for-profit organization if it is subjected to audit under any law. Equally, like it is applicable for a company. So one worry which we will be having is, I know about how to do a tax audit. I know about how to do an audit of okay. Sir, is there any checklist for accounting standard? Sir, I'm in the process of preparing a comprehensive checklist considering the impact of even the COVID-19 situation. As of now, it is not yet over because of unforeseen pressure which came in for listed companies. I will be completing it in the first week of July, and I will upload those checklists for you. And I will actually send it to your branch, and it will be uploaded as part of the Vijayawada's the YouTube channel. It will be uploaded, and I also have an YouTube channel. There also I will upload. You can download from any places like that. I'm in the process of doing it, but it's not reached the completeness stage. I wanted to give you a checklist for accounting standard. I wanted to give you a checklist for company law applicability, and I wanted to give a checklist for the purposes of issuing your income computation and disclosure standard, and also the audit report, specimen audit report I wanted to give. So all these things will be ready by first week of July, and I will upload that and also share with the Vijayawada branch for enabling it. As of now, it is in the process stage. I will share with you, sir. When we are talking about the consideration which we are talking about for when accounting standard has been made compulsory compliance, as a practicing unit, I was not familiar with the accounting standards. How I will be able to manage the accounting standards compliance? For first of all, I should understand that, and then my staff should be trained, and then they have to do the audit in accordance with the accounting standard. Client should be created an awareness. All these things are coming as part of the question. When I am a small and medium practitioner, don't worry. I always believe that you can simply have a practical approach to the accounting standard. That is what putting into practice the standards on accounting standards with respect to small and medium enterprises. That's the way in which we have structured the entire discussion. What I am trying to give you, how you can understand is that when I'm talking about a checklist approach, somebody has asked about the checklist approach. You may be having a draft checklist. A simple checklist format I will tell you, but I will try to give you a comprehensive checklist. What is the simple checklist? Put down your standards from 1 to 29, and of course standard 8 will not be there because standard 8 has been combined along with the standard on intangible asset AS 26. So you will have 28 standards which will be there. For each standard, what is the objective of the standard? Why the standard has to be applied? What is the principle which you have to consider in respect of the methods which is prescribed in this? This will come in the first paragraph of every standard. So just to plot that, you can even copy paste what is given in the objective into your part of your second column in your Excel sheet. First is, maybe I can say third column. First is what is the standard number, what is the name of the standard, and the third column you can actually put what is the objective of this standard. Then the fourth column, when we are talking about, we will talk about, when we are talking about the fourth column, we will talk about whether it is really applicable to the particular client. Here, whatever I have discussed now, whether it's a corporate, whether it's a cooperative, whether it's a non-corporate, it's applicable, provided they are carrying on commercial activity or industrial activity or business enterprises, even if they are profit oriented or not. Even NPO, it is covered, we have said. Even for charitable and religious organization, if any proportion is having commercial, industrial and business nature, they should also get covered that. And in case if the financial statements are prepared on cash basis also, there is a possibility of the accounting standards applicable. So we get into to whom it is applicable. Then if you see, what is the reason why this particular standard is applicable? I should say that except few standards, all standards are applicable to everyone. Few standards, when I'm saying cash flow statement is exempted for certain types of non-corporate entities, certain types of small and medium companies. When you are talking about standards on consolidation, unless it is a company, consolidation is not applicable. So non-corporate entities, the standard like 21, 23, 27, 3 standards which is talking about consolidation is not applicable. For a small and medium company, unless it has a subsidiary or an associate, it is applicable. Otherwise, it is also not applicable. So you fix it up whether this particular accounting standard is applicable or not as part of your checklist. If you tick that it is applicable, then have you complied with the requirement? In fact, I used to say that what is the reporting requirement which is there in respect of that particular item? What is the key focus area? I think that is what we are going to discuss in this. What is the key focus areas which we are going to observe with respect to the particular accounting standard? For example, if I am saying the company is setting up its factory. So the moment I'm saying it's setting up the factory, it doesn't have it revenue. So AS 9 relating to revenue recognition is not applicable. The company has fixed assets in progress. So to that extent, AS 10 will be applicable. I tick off. And first accounting standard AS 1, which is relating to significant accounting policy. Definitely it is required. Second accounting standard AS 2, inventory. No inventory because no production, not applicable. Third accounting standard, cash flow statement. Cash flow statement is applicable. I think I will cover later, but I will tell you now. Cash flow statement will applicable for only for bigger companies and bigger non-corporate entities. When I'm saying bigger, it says if the turnover is above 50 crore and the borrowing at any time is more than 10 crore, then only it is applicable for both for SMC and for SME. So if the turnover is less than 50 crore and the borrowing is both the conditions, any one condition satisfied also it is applicable. So turnover is less than 50 crore, borrowing is also less than 10 crore, then there is no requirement to prepare a cash flow statement. So just when you come to AS3, to whom it is applicable, turnover is the criteria, turnover is less than 50 crore, borrowing is less than 10 crore, so not applicable. Like that you plot AS4, events occurring after the balance sheet date. Like that you go on AS5, change in accounting policy, change in accounting estimate, accounting error. AS6 is no more there. So it is now merged with, of course, it is not 28 standard, now 27 standard, because AS6 is merged with the AS10 now. And then AS7, only it is applicable to a client who is carrying on construction contract. If construction contract is not there, put a business is not construction contract, then put an X, not applicable. AS8, like this, if you, AS8 is not there. AS9, revenue recognition, definitely will be applicable, but in this particular situation, the company has not yet started production and accordingly not applicable. AS10, property, plant and equipment, yes, it is applicable. AS11, have you taken any loan in foreign currency and that foreign currency loan has been used for the purposes of your project? In that case, AS11 should be applied. AS12, is there any government grant which you have received? In that case, AS12 will be applied. AS13, whether you have made an investment out of the surplus funds, then AS13 will apply. Like this, you will go on plot your all the 29 standards, and of course 2 standards, AS6 and AS8 is merged with the other standard. So 27 standards, effectively you note down whether it is applicable or not. Once you have noted down it is applicable, what is the areas for consideration? For example, if I'm talking about a company which is setting up its factory, whatever borrowing which they are having, the related borrowing cost should be capitalized if it's a qualifying asset. So AS16 is important, and in AS16, whether it's a qualifying asset is important. What is qualifying asset? We have to understand. We will discuss all those things later on. I'm just giving you an overall picture or macro picture of how your checklist should have. I'm also planning the same thing to give to you. On that basis, if it is applicable, one single page Excel sheet is enough for you to guide whether you are complying with the accounting standard. After you have done it, in fact, I'm going to talk about a checklist approach at a later point of time. Since you have raised that point, I'm discussing that. Planning stage, you will give a guidance to your team members whether a particular standard should be applied. In the execution stage, you would check whether compliance with the standard has been done. In the final stage where you are reporting, is there any deviation from the standard? All these can be plotted in the same Excel file. And from the Excel file, you can conclude whether anything to be reported in the audit opinion or no. So if you're saying that disclosure has been properly made, the recognition and measurement has been properly made, nothing to be reported in the audit opinion. In that case, none to report. So if everything is none to report, your audit opinion and your audit documentation is also properly done, right? That's what the checklist approach, which will be the better approach to go as a simple process for you to consider the applicability for a non-corporate entities or a small and medium company. I will help you out in that. When we are talking about the accounting standard, there is one confusion which we are still having. We write, even for the audit opinion, I have still seen in some of the audit opinions for a company where we are saying the accounting standards notified by the Institute of Chartered Accountants of India. The financial statements have been prepared in accordance with the accounting standard notified by the Institute of Chartered Accountants of India is being used in some of the company's report. Please understand, we have 3 sets of accounting standards as of now, and that is going to be 2 sets of accounting standards at a go forward basis. Maybe by 21 or 22 we will have that. As of now, what happens is, in respect of non-corporate entities, all the standards issued by the Institute of Chartered Accountants of India will be applicable. What does it mean is that a non-corporate entity is not covered by Companies Act. A non-corporate entity is not covered by any particular act which is talking about accounting standard. Accordingly, the standard which has been prescribed by the Institute of Chartered Accountants of India will be applied to the non-corporate entities, provided it meets all the 3 criteria which we have talked about: carrying on business, commercial or industrial activity, preparing a general purpose financial statement, subjected to audit under any other law, any law. So if that is the case, we have to go and check what is the standards issued by the Institute of Chartered Accountants of India. This is also AS1 to AS29. There are some differences between the standards which are applicable to non-corporate entities and for general companies. When I'm saying general companies, small and medium companies, companies who are not preparing according to Ind AS. Ind AS, if they are preparing, then there is a separate set of accounting standard has to be seen. In a normal cases where our majority of our clients will be having small and medium type of business, and that case it is a small and medium company. They are not even a bigger company. You will see what is small and medium company, what is a bigger company later point of time. So assuming that majority of our clients will be either non-corporate entities or small and medium companies, what we have to understand is only these 2 sets of accounting standard. One is the standards issued by ICAI for non-corporate entities. Another set is the accounting standards notified by the Companies Act as part of section 133. As part of section 133 under Companies Accounting Standard Rules 2006. This rule has been amended from time to time. Very recently, it is amended in 2016. I think somebody is having a problem of connecting and disconnecting. Shivakumar Reddy is repeatedly connecting and disconnecting, and again he is coming back. Maybe he has to check his connectivity and internet connectivity for that purpose. So if it is a company, we have to comply with the Companies Accounting Standard Rules 2006. It has been amended from time to time for the purposes of compliance. Now, the third category is bigger companies where they are covered by Indian accounting standards. For example, if the turnover is more than, net worth is more than 250 crore, or it is a listed company, they have to necessarily follow IFRS converged Indian accounting standard, we call as an Ind AS. So for our discussion, I am not considering this part at all, because our idea is to discuss on small and medium enterprises and non-corporate entities, and accordingly, this particular case of Ind AS, we are not going to discuss the in the entire discussion, for a simple reason: it is applicable for very big companies. net worth itself is 250 crore, or it is a listed company. So that is a separate discussion. So we will not get into India's related applicability as of now. We will only talk about the case where we have standards issued by ICA and the company's accounting standard rules 2006. So let us understand what is the difference between these two sets, how we can learn each other. Suppose if I know only what is the standards issued by the institute, and I don't know about company's accounting standard rules 2006 as amended from time to time, is it a way in which I can try to learn what is the only difference? If I understand that difference, I will be able to comply with company's accounting standard rules 2006 also with all the amendments. Yes, it is possible if you understand what is a conceptual difference. What is the conceptual difference? AS of ICA is issued by Institute of Chartered Accountants of India, whereas company's auditors report order is notified by the Companies Act 2013. Just give me a minute. I will take some water and then continue. So these are the sets of standards which has been notified under the Companies Act 2013. Now, the next important difference is this AS has been required to be complied with non-corporate entities. A non-corporate entity cannot comply with the Companies Accounting Standard Rules 2006. Similarly, a company cannot apply with the standards which has been issued by Institute of Chartered Accountants of India. So when you are giving your audit opinion, if it is a non-corporate entities, you have to talk about the accounting standards applicable issued by the Institute of Chartered Accountants of India has been complied with is what you have to see. When you are giving an audit report under the Companies Act, you have to say that the company has complied with the accounting standards notified under section 133 of the Companies Act, read with Companies Accounting Standard Rules 2006. That's what you are supposed to give in your audit opinion. And the third point is the accounting standard issued by ICAI has been classified to various categories of entities based on level 1. Level 1 is having more than 50 crore of turnover and 10 crore of borrowing. Level 2, companies having more than 1 crore of turnover but less than 50 crore, and it is having a borrowing of 1 crore and above but less than 10 crore. They have classified as level 2. And level 3 is all other smaller enterprises. So that means if you are having a tax audit, what will happen is you will go to level 2. If it is a not a tax audit, you will be in level 3. If it is a level 3 cases, you may not be subjected to under any other law. To that extent, it is not subjected to law. You can simply ignore the applicability of the accounting standard. The moment you are saying my entity is subjected to tax audit, you are moving to level 2. In level 2, because it is preparing a general purpose financial statement and it is subjected to audit under the income tax law, you should comply with all the applicable accounting standard. When you come to the company, it classifies the companies into two categories. One is small and medium companies, other than small and medium companies. When we are saying small and medium companies, what it actually talks about is that it says that the company's turnover is not more than 50 crore, borrowing is not more than 10 crore, the company is not a listed company, company is not a proposed listed company, company is not a banking company, company is not an insurance company. Like that, they have given a list. What are all the companies which are considered to be non-SMC, other than small and medium companies. Other than this category, all other companies are considered as small and medium companies. In simple terms, if you wanted to compare between AS and companies accounting standard rules, level 2 and level 3 is equivalent to SMC companies, small and medium companies, level 1 is equivalent to non-SMC, just for you to understand, but don't get confused. Here it says small and medium companies other than small and medium companies. And here it says level 1, big non-corporate entities, medium non-corporate entities is level 2, and the level 3 is other than this very, very small non-corporate entities. Interestingly, even though they are split into various levels, level 1, level 2, level 3, SMC and non-SMC in both the categories, what they have done is they have only given relaxation with respect to disclosure element. What is the notes on accounts which you have to have? There only they have given a exemption. They have not given any exemption with respect to recognition principle. When an asset or a liability or an income or expenditure has to be accounted in the financial statement, no exemption has been given. That rule remaining to be the same. Fixed assets, how to be accounted, remaining to be the same for any level, level 1, level 2, level 3, remaining to the same for small company and big company. Okay, the recognition principle not changed. Measurement, how you will put a valuation for that at cost or at revaluation model, those also remaining the same. The principle remaining the same for non-corporate entities at whatever is the level. Similarly for companies, whatever is the level. The first one or second one, whatever is the level, it continues to be the same thing. Only disclosure, they have given certain exemption. Let us try to understand this exemption. If it is Companies Accounting Standard Rules 2006, which classifies small and medium companies and other than small and medium companies, this is a simple one slide explanation of what are all the accounting standards applicable. AS 1 to 14 except AS 3, because AS 3 is applicable only for a bigger corporate. For SMC it is exempted. 15, 16, I'm leaving 17. 17 is segment reporting. Segment reporting is not applicable to small and medium companies. 18, 19, 20. 21, only if consolidation is required to be done. Normally, small and medium companies will not have subsidiaries, associate, and joint venture, because the moment you have subsidiary, associate, and joint venture, Companies Act section 129 subsection 3 says that you have to prepare a consolidated financial statement. So it becomes a mandatory requirement. So for AS 21 is not covered. 22 is deferred taxes. It covers even for small and medium companies. 23 is talking about when one company has invested less than 50% in another company, associate company, how to account for that? That is coming from 23. That is also not applicable. And 24, 25, 26 is applicable. 27, investment in joint venture is applicable. Only a portion of that. For example, in a small and medium companies, the joint AS 27 is talking about one consolidation, and another portion is how your standalone financial statement should be prepared. So that standalone financial statement preparation should be in accordance with the AS 27. That's the reason why I have ticked that also. And 28 will be applicable, 29 will be applicable. So what is not applicable to SMC? Only two standard, AS 3 cash flow statement, AS 17 segment reporting. That will be applicable only if it is a level 1 entity. Otherwise, it is not applicable to them. Other consolidation related standard will be applicable only in relation to preparation of the consolidated financial statement. Now, what is the disclosure exemption which you are having? You have an exemption with respect to disclosure only, and not with respect to the measurement principle and recognition principle, like we have taken example of fixed assets for a small and medium company or a small and medium enterprise. Now, one point I wanted to tell you is that even if you're auditing a small company, small private limited company, previously accounting standard 18 on related party transactions was not applicable. The moment Companies Accounting Standard Rules 2006 has been enacted in December 2006, it has made it mandatory for small and medium companies as well. But majority of the small and medium companies failed to disclose related party transaction as part of the notes and accounts. So that is where they have been questioned for non-compliance. ROC sends a lot of notices to smaller and medium companies just because they have omitted to disclose the related party transaction. So please understand that AS 18 is applicable to all entities irrespective of the size. So you have to disclose that according to Companies Accounting Standard Rules 2006. Can you give a simple overview of non-corporate entities and the accounting standards? I can give you a simple concept. Level 1, level 2, level 3. We have said level 1 is having 50 crore turnover and 10 crore of borrowing. And level 2, we have said turnover more than 1 crore and borrowing less than more than 10 lakhs. It's actually covered in level 2. And level 3 is other than these companies. We have already discussed that particular point. Only thing which is we have to keep it in our mind is if these entities are not preparing a general purpose financial statement and they are not subjected to audit, they need not comply with the accounting standard. But having said that, the moment I'm saying level 2 enterprises turnover is more than 1 crore of rupees, it is covered under tax audit. Automatically level 1 and level 2 has to comply with the accounting standard. Level 3 of non-corporate entity, depending upon whether you are going in for some sort of special audit like deeming fiction now, your presumptive taxation 44A, AD, AE, when you are getting into that loop, to that extent, you may be having a situation of application of level 3 also requiring an accounting standard compliance. So I'm just giving an overall picture, but you have to check that for your individual client status. Now, what are all the accounting standards? If you see, there is no difference between what I have seen, AS1 to AS14 except AS3. So cash flow statement is not applicable for level 2 as well as level 3. It is applicable only for level 1 enterprise, 50 crore turnover and 10 crore borrowing. And AS18 and AS24. AS18 is related party transaction. AS24 is in respect of discontinued operation. This is applicable to level 1 and level 2, but not applicable to level 3. So level 3 need not present disclosure relating to related party transaction. 21, 23, 27. If you prepare consolidated financial statement, normally a non-corporate entity will not have a subsidiary. Even though I'm ticking it, because the preface says that it will be applicable to a non-corporate entity under level 1, but normally they don't have the concept of preparing a consolidated financial statement, because consolidated financial statement is mandatory for a company having a subsidiary. That's the reason why under the Companies Act, we have to mandatorily prepare. In this case, if you prepare a consolidated financial statement, maybe you wanted to know one group, partnership group, has invested in several enterprises and they wanted to see the net group performance. You prepare a consolidated financial statement. In that particular situation, you have to comply with the requirement of 21, 23, and 27. Otherwise, it is not at all required even for a level 1 enterprise. So this gives you a complete guidance of preparing your own checklist of what is applicable, what is not applicable. Okay. Now, what is the relaxation here when I'm saying not applicable? I need not do anything on AS7 and AS17, fully exempted. I need not do anything with respect to AS18 and 24 for level 3. Consolidation, I need not do anything except this. For all other accounting standard where measurement principles or recognition principles are coming in, they are only giving an exemption with respect to disclosure, except one circumstances where AS15, employee benefits, you are supposed to take an actuarial valuation, right? For providing your gratuity or leave encashment, you are supposed to take an actuarial valuation. What it says is that if the number of employees are less than 50, but for a non-corporate entity, that particular non-corporate entity can determine its provision for gratuity and provision for provision for leave encashment based on based on the principle of actual valuation. What do you mean by actual valuation? Every employee based on the completed year of service is entitled for gratuity, half a month salary, 15 divided by 26 into last drawn salary into number of years service. That is an actual liability basis. You can prepare based on actual liability basis. That exemption is available where your client is having less than 50 employees. There is an exemption which is available. That exemption is available for all the three categories because it's a specific exemption with respect to number of employees, not based on any level. Okay. This is a single slide based on which you can create your own checklist for applicability of accounting standard. And the next discussion which we should have is that, of course, we have discussed this, right? What is the checklist approach? One of the points which I have missed out in the checklist approach is normally one particular column will be there. That particular column is what I'm talking about, linking the accounting standard with the financial statement line item. I have given an example where the entity is setting up its factory, not having any revenue. So in that case, I said fixed asset, you have to look into the borrowing cost, you have to look into the qualifying asset, etc. The key focus area. What I am trying to say is that what is a line item in the financial statement will get impacted by this accounting standard also, you can plot. For example, if I am talking about fixed asset, AS10, I will say property, plant and equipment. I will say borrowing cost. If I put these two items, and of course, I will also say repairs and maintenance expenses. Why repairs and maintenance expenses? Whether any of the items in repairs and maintenance expenses is actually having a relevance, or whether it meets the criteria of an expenditure, or it meets the criteria of being charged to the, being capitalized as an asset. So that we have to assess. So I will put the three line items of the financial statement: property, plant and equipment. Then I will give borrowing cost, the finance cost or interest expenses, whatever. And third, I will say repairs and maintenance. So if these three items, when some of your audit team is going to verify, they know AS10 requires borrowing cost to be capitalized. AS10 requires only if it results in economic benefit to the entity, it has to be capitalized. So repairs and maintenance, when you analyze, you will look into that. And with respect to property, plant and equipment, what is the cost which can be capitalized? What is the cost which cannot capitalize? So all these things your audit team will automatically look into that. That is what I am trying to say, linking the accounting standard with the financial statement line items, both in the balance sheet related items and P&L related items. You will never make an error. When you are doing that, you will never make an error. Based on which you can also give an audit strategy. But of course, that is not part of accounting standard checklist. It is an auditing standard related checklist. You can extend it. Because in a smaller and medium enterprises, if you wanted to say what is your audit strategy and audit plan, you can simply say this is my entire client's balance sheet and the entire client's P&L account. And for these items, this is what I am going to do. Accounting standard compliance, standards on auditing. Based on the standards on auditing, what is the work which I am going to do? For example, when I'm saying fixed assets, I'm just taking a fixed asset. What is the thing which I'm going to do? I will check whether this particular depreciation for the current year has been properly accounted for or not. So depreciation, how I will validate depreciation? I will re-perform or recheck whatever client has given in the Excel sheet. I will go and check the items, whether additions have been properly accounted, deletions have been properly accounted, whether the rate has been properly considered. Based on the rate, whether the calculation, because Excel sheet can make a big blunder also. So whether the calculation has been properly done. Based on the calculation, depreciation minus the cost has been brought in as a WDV. Whether the WDV matches with the balance sheet, whether the depreciation for the year matches with the balance sheet, whether accumulated depreciation matches with the disclosure given as part of the financial fixed assets disclosure note, whether the gross cost matches with that. So all these things are my audit strategy. So you are giving only 4 or 5 points for your audit team. They will execute that particular work, and you will verify whether the work papers have been in accordance with that. That's a simple logic. But anyway, detailed work is coming as part of standards and auditing. At the completion stage, what I do is, by looking into the accounting standards checklist, whether they have carried out the required recognition and measurement, by looking into the financial statement as the case may be, I will look into that and verify that. Plus, what is the disclosure and how it is presented in accordance with Schedule 3, in accordance with the accounting standard, whether it is presented, I check that particular aspect as well. This is what your checklist approach should be. So you can prepare your own checklist based on the last 3 slides, what is applicable for small and medium companies and other companies as per Companies Accounting Standard Rules 2006. And second checklist you can prepare for non-corporate entities based on level 1, level 2, level 3 classification. And that can link to planning stage as well as completion stage. This is what I am trying to attempt for giving a extensive or exhaustive guidance. It will take a little bit of time because there are some amendments came in Companies Accounting Standard Rules 2016. That has to be brought in properly into that. That is what will happen for some more time. And I will share that at a later point of time. Okay. When we are talking about the accounting standard, what exactly is the audit report consideration? Suppose a client has not followed an accounting standard, but the client has followed the accounting standard, but partially. The client has followed, but there is an error. So what is the audit report consideration which I have to consider with respect to the accounting standard? It's a very simple logic. I will start with asking whether the entity has actually followed the accounting policy, that is a recognition and measurement principle, and made the disclosure in accordance with the accounting standard. If I ask the first question, is the accounting policy is as per the standard, then I will ask, this is actually schedule the sections of the Companies Act, but you can use the same principle without the section for a non-corporate entity also. If the accounting policy as per the standard has been followed, then you will make a positive statement that they have fair presentation in case of non-corporate entity. In the case of company, specific section where you say they are the financial statements referred to in our report are in compliance with the accounting standards referred to under section 133 of the Companies Act. You make a positive comment. Suppose if you say, no, they are not complied with that, then you have to make a negative statement that it is not in accordance with that. But before doing it, what it requires is that whether the deviation is effective. The deviation is material. What do you mean by material? Assuming that I have made a profit of 10 lakhs and this particular item is only going to have an impact of 10,000 rupees. 10 lakhs or 9,90,000 doesn't make any difference for the user's point of view. User is comfortable with plus or minus 5% or 10% of the total profit, right? So in that case, before I make a negative statement, I will check whether the deviation is material to the financial statement. Again, what is material will be part of your standards on auditing. That's the reason why I'm not discussing further on materiality. Keep that as part of your discussion point when standards on auditing session is being done. The speaker will explain to you based on your question on that. So if the deviation is material, then your audit report should be qualified. If it is not material, no qualification is required. Even if there is an error, because it is not material, the standards on auditing says you can issue a clean audit opinion. Okay, you can follow that principle both for a corporate entity as well as a non-corporate entity when you are considering the audit opinion, whether to be qualified or not, use this particular principle with respect to the accounting policy. That is, accounting policy is for recognition of an asset, recognition of a liability, recognition of an income, recognition of an expenditure, and how that should be measured. That is your accounting policy. So this is one part of the story. The second part of the story is whether the company has made the disclosure in accordance with the standard. Accounting standard requires certain disclosure to be made. For non-corporate entity also, if that standard is applicable, we have already discussed, you should give that disclosure in addition to the disclosure required under the company income computation and disclosure standard. I have told you that that is also required. So if that disclosure has been made in accordance with the standard, if I say yes, then you can say it is in compliance with the accounting standard. Suppose if I am saying no, again I will say whether it leads to a violation of your legal requirement. There is a specific discussion which has to be, a disclosure has to be given, and whether that legal requirement says if material disclosure is missing, you have to report on that. It's a violation of a particular legal requirement. If I am saying yes, a particular law requires you to disclose the particular matter in the notes and accounts, but that material disclosure is missing, it becomes a violation under any legal requirement. Then you will say you have to qualify your audit report. If I say no, the next question is, because this is not disclosed, whether true and fair view of the financial statement is affected. For example, you are presenting, I'm just taking the simple example because if everybody will be having your fixed asset. In respect of fixed asset, how you have calculated your depreciation is not disclosed. Or in respect of inventory, how you have valued your closing stock and opening stock, cost or net realizable value. And what is the cost formula you have used, first in, first out, or weighted average method. So whether you have disclosed that significant information or not, or you have discontinued an operation that is contributing more than a significant portion of the current year profit. Next year, it is not going to be there. You have not disclosed that. It will affect the true and fair view of a particular situation. In that case also, it says qualify. If it is not a violation of the legal requirement, it is not affecting the true and fair view, the disclosure is not significant disclosure, then you need not do any qualification in the audit report. This also you can keep it as part of your work paper to ensure that after you have seen the checklist for the accounting standard compliance, is there anything which you have to specifically worry about that particular aspect in the audit report consideration. When you issue Form 3CB also, if any of this non-compliance has been observed, you are expected to make a qualification. You may ask a question, sir, there is no place where in Form 3CB I can qualify. It gives subject to our observations here. There are some cases where the observation will be limited to certain characters in your e-form. One of the things I used to do is that if there are any qualification or if there are any disclaimer which I wanted to observe in the subject to our observations below in the e-form, we will fill that. Please read our observation in the PDF format of our report attached in this particular form, and we will make reference. It should be read with that particular attachment. In the attachment, we will have a physical copy of the entire form with all the disclaimers, all the qualifications, whatever is required, or whatever observation which we have to make. We will put everything in that report and sign it. In fact, we prepare a Form 3CD also like that. Form 3CD physical copy with all the disclosure, all the annexures signed by us as well as the client. Then we scan it and upload under other reports. In tax audit report, you can have one uploading option for adding something additional, right? There we will upload. Then give the cross reference of that in this particular column. Any other observation when you are talking in Form 3CB, I will refer that to be read along with the attached signed copy of the financial statement in PDF form. Okay, so that will help you in making the user to look into that particular aspect, and also you will be able to give whatever qualification which you wanted to give in detail. That is also possible. But having said that, I must tell you one simple principle. 90% of our client cases where it is small and medium companies, 90% of the cases where it is small and medium enterprises, maybe we can go to the extent of even 95% to 98% will not have a qualification. Okay, to that extent, it may not have any implication in audit report. But having said that, please take into consideration on this. Now, we will select certain specific standards and try to understand what we are supposed to cover as part of our discussion in respect of this particular accounting standard. So I will just cover for another maybe 10 to 15 minutes, and then we will move on to our Q&A session. One of the points which we are having is that in accounting policy disclosure, whatever new item which is coming in, last year this item is not there. For example, I don't have an intangible asset last year, but this year there is an intangible asset. Please be careful. When you have the checklist, automatically it covers intangible assets AS 26. Then the balance sheet line item comes as a new one. Then you will also have in your AS1 checklist, you have to talk about the accounting policy relating to that new item which is coming in. What is not applicable to the enterprise, you need not have that as part of your accounting policy. One of my friend, after he got a notice from the Registrar of Companies in respect of one particular accounting standard, he started preparing for the next year onwards, accounting standard 1, disclosure of accounting policy. Please see page number so and so to so and so. Accounting standard 2, no inventory because the company is in service industry, not applicable. Accounting standard 3, cash flow statement not required being a small and medium enterprise. This type of irrelevant disclosure is not required. Only if it is applicable, you have to have your accounting policy, otherwise it's not there. And if there is a change in accounting policy, don't mix up with the accounting policy, because change in accounting policy comes as per AS5. And AS5 requires you to disclose the quantitative impact of the change in accounting policy. What is the previous accounting policy? What is the changed accounting policy? Because of that, how the profit or the asset or liability has been changed. You are supposed to disclose. So don't combine them together. Going concern issue. The COVID-19 is posing a big challenge relating to COVID-19. Because of that, some companies be able to survive, some non-corporate entities able to survive, some of them could not be able to survive. In fact, in one of the examples which I have discussed in an earlier forum, I talked about a chain of hotel restaurant which is not a company. And the chain of hotel restaurant could not operate for 2 months. But the fixed cost which they have to incur was huge. And those costs makes them not viable to continue, because they don't have a cash flow, they don't have a loan. How they will be able to survive for the next 12 months become a big issue for going concern. And the going concern has to be considered very seriously with respect to your audit under the COVID-19 situation. My suggestion is, there is an advisory which has been given by the institute, a beautiful literature which talks about both accounting requirement and auditing requirement. Please refer to that. What are all the financial statement component which will get impacted? They have very beautifully covered. And what should be the consideration for audit report also they have covered. Please go into that and accordingly you consider. And if you remember the previous slide where we have talked about audit report consideration, whether it is material to the financial statement. The reason is very simple. The preface to the accounting standard says, only if the accounting standards are material to the financial statement, you have to comply with that. Otherwise, we can ignore that. For example, gratuity provision is only 10,000 rupees. There is no requirement for me to even consider AS 15 at all, right? So materiality should be one of the factors which you have to consider in AS 1. In AS 2, the major consideration is only two. One is cost versus net realizable value. Always has to be a consideration. Especially we have seen in COVID-19 situation, this is a problem. because market has crashed. You are not able to claim the same selling price, or maybe you are dependent on export market where the lockdown is not yet lifted. Will you be able to sell at the same price, or you have to keep that stock in your as a finished stock? If the finished stock is capable of realizing the same price, or if it is not going to be capable of realizing the cost, then you have to write down your cost. That is one of the consideration, again coming specifically for the current season because of COVID-19 situation. Another thing is you have to allocate your overhead expenses. That overhead fixed cost should be allocated based on normal production capacity. But in 2020, I don't think that it will have an impact because the lockdown has been announced only on 24th of March. Hardly 7 days you don't have a capacity. It may not have impacted your normal capacity. In the current year, you may have an issue because we are already lost 2.5 months, right? April, May, and now in June also we have a problem. And we are not clear about the containment zones where it will be lifted. So to that extent, 21 March, when you are doing an audit, the overhead allocation may be a challenge, especially fixed cost. That is one area you have to consider. And changes in accounting policy, changes in accounting estimate and accounting errors has to be very clearly identified, and they have to accounted for in accordance with the AS5. AS5 says accounting policy change means you have to find out the cumulative effect, debit to the P&L account or credit to the P&L account, explain by means of note what is the quantification. If it is a change in estimate, what is the change in estimate? Maybe I have used depreciation as per WDV method. Now I am moving to fixed asset method, straight line method. In the straight line method, if I have applied WDV method, what would be the impact? That's a change in estimate. You explain the change in estimate and also what is the quantification of that. If there is an error, how you have corrected the error, you have to disclose. In AS5, only if the client is in construction contract activity, he is in taking a contract activity and constructing an asset or doing a service contract, like an AMC contract, cleaning activity or whatever type of activity which they are doing, then it will be part of your AS7 relating to an building of an asset, demolishing of an asset, or any consultancy relating to construction of an asset. The only thing which you have to keep it in your mind is completed contract method is not acceptable as per AS7. So that means percentage completion should be always applied. And there is a requirement, suppose at the time of you recognizing the percentage completion, you believe that there will be a possible losses at the end of the contract period, the foreseeable future losses should be estimated and recognized immediately. That is what AS7 says. But ICDS is talking differently. ICDS says foreseeable future losses cannot be estimated and provided. It has to be only accounted based on percentage completion method. There is a difference between ICDS and AS7. So when you do a tax audit of a client who is having construction contract as an income, and you have to have a different accounting policy as per AS7 and different for ICDS, there will be an adjustment coming for ICDS. Okay, you have to take into consideration. AS10, again, there is a difference between AS10 says depreciation should start from the date on which the asset is ready for the intended use. Even if it is not put to use, you have to charge depreciation. But ICDS on property, plant, and equipment says you have to charge depreciation only from the date put to use. That is, could be a possible difference in your calculation of deviation between ICDS. Whether depreciation claim is optional under AS, no. Even if it is idle machinery, you have to charge depreciation. For example, COVID situation, that 7 days also it is idle, 2.5 months also it is idle as of now. So whether I have to say that I will not charge depreciation because I never used that asset, depreciation is an reflection of time, so you have to consider that also as part of the depreciation. Economic useful life, it is a company, you have to align that with the Schedule 2. Any deviation from Schedule 2 should be reported specifically as per this particular standard. A capital WIP in the COVID situation, I always check whether they are having the funds to complete and put it into use. If it is not there, there is an impairment test which I am supposed to apply. That I will apply. When I come to AS11, foreign currency balances are there, then the standard is applicable. If there is no foreign currency transaction or foreign currency balances, then it is not at all applicable. So in case if you are having a forex difference, assuming that you have taken a loan in foreign currency and used it for purchase of fixed asset in a non-corporate entity is very rare, but in a small and medium companies it could be possible. When you are doing it, there is a forex difference. When you took the loan, it was say for example 65 rupees per dollar. Now it is 70 rupees per dollar. You lost 5 rupees per dollar. That increases your outflow when you are settling your liability. That 5 rupees is called a forex difference. What to do with that forex difference? The forex difference in AS11 says you can charge it to your you have to consider whether it's an adjustment of your borrowing cost. For example, if I'm taking the loan at 3% in foreign currency and forex difference constitute another 4% when I'm putting it as percentage of my loan. So 7% is a total outflow for me. If I'm taking the same loan in Indian currency, I will pay 10%. That 4% of forex difference which I have identified is nothing but adjustment of borrowing cost. So accordingly, it will move from AS11 and it goes to AS16 borrowing cost, qualifies for capitalization if it is a qualifying asset. So that is what you have to do. There is an option for capitalizing the forex differences as per paragraph 46 and 46A, which you can actually consider. Okay, sir, 7:45. I will plan accordingly, sir. No issues, sir. When we are talking about this forex differences, there is a difference in case if I have taken a forward contract. Again, in non-corporate entities will very rarely take forward contract. Sometimes for hedging, the banks will insist on a forward contract and you have done the forward contract. The accounting treatment of forward contract as per AS11 is different and ICDS is different. You have to consider that. Most importantly, unrealized forex loss. For example, I have taken a loan, but not yet repaid. So I have to restate at the year end, at the closing rate. That portion is considered as a unrealized forex loss. When it is an unrealized forex loss, there is a section called 32 capital A under the Income Tax Act, which says unrealized forex loss with respect to import of fixed asset cannot be capitalized. Only if it is realized, it can be capitalized. Interestingly, it uses the word unrealized forex losses with respect to import of asset, depreciable asset is capitalizable. Means, yeah, I take an ECB loan, but purchases local machines, then the forex differences will never be allowed under the Income Tax Act, even if it is realized. So to that extent, there will be a difference between Income Tax Act and the AS11, which we have to consider as part of our accounting principle. AS16 borrowing cost, if it is a qualifying asset, you will capitalize. But there is a difference between ICDS and this. The moment I took a loan, ICDS says till that asset is put to use, you have to capitalize that particular interest as per the ICDS on borrowing cost. Whereas if you are saying in the case of AS16, it requires minimum 12 months for the asset to get ready for the intended use. The definition of qualifying asset is totally different between AS16 and ICDS on borrowing cost. You have to consider that as an adjustment. And again, borrowing cost suspension. For example, if I am setting up my factory during this COVID situation, the construction has been stopped. This is considered as an abnormal delay. So I am not entitled for capitalization of the borrowing cost during that period as per AS16. It has to be suspended. Whereas no such suspension is possible under ICDS. Again, that may constitute a difference in the COVID-19 situation. AS18, as I have said, only problem which I will normally identify is that you are giving a tax audit disclosure under 48(2)(b). That is not matching with the disclosure which you have given in AS18. There should be a complete reconciliation. You have disclosed a lot of items in AS18, but omitted to disclose in Form 3CD. Then you will be questioned by the income tax officer. You have intentionally you are doing it. Abatement of the misreporting or non-reporting you will be party to that. So 271(1)(j) may be implemented to you. So that you have to be careful. And similarly, what you are disclosing relating to loans to directors on related parties given versus what is the deemed dividend provisions under section 2 subsection 22E, that also you have to read in together. Otherwise, you might have disclosed in AS 18 inadvertently by mistake, but assessing officer will read that and say that it might be treated as a deemed dividend paid during the year. And why can't I adjust that as a prima facie adjustment under section 143(1)? Possible. So you have to be careful on that particular situation also. Leases. So you have to only consider that finance lease still treated differently for tax purposes. So in finance lease, the accounting standard says that the lessee should capitalize the asset, he has to claim depreciation, and whatever repayment which has been made, it should be allocated between repayment of principal and interest. Whereas when it comes to income tax, it only says that you are not the owner. Owner is the lessor. Accordingly, lessor will be entitled for depreciation and not you. That means the entire accounting treatment has to be reversed in AS 19. AS 20, diluted earnings per share, very, very rare circumstances for smaller and medium companies. But if you're having share application money pending allotment, that should be considered as part of calculating your diluted EPS. But smaller and medium companies, there is an exemption available not to disclose diluted EPS. Non-SMCs, you have to be careful on this. Diluted EPS has to be disclosed. So that is one of the important aspects on this. Coming to AS 22, taxes on income, majority of the circumstances, the major error which we are doing is that we are simply providing deferred tax asset without even considering whether it can be adjusted against future taxable profit. Company continuously incurring losses, the non-corporate entity continuously incurring losses. In that situation also, we are creating deferred tax asset, not in accordance with the AS 22. And another problem which we are seeing is that the current tax provision and deferred tax provision together, if I'm adding it divided by the profit before tax, normally it should be equivalent to the rate of tax applicable to the entity, whether it's a company or a non-corporate entity. Non-corporate entity slab rates is applicable, we have to consider the slab rates also. That effective tax reconciliation will help you to understand that we are not making any error. We are not making any error with respect to the provision for tax as well as deferred tax, as the case may be. Another point which I was trying to focus is minimum alternate tax entitlement, where your current tax is, say, for example, 100 rupees, and your book profit tax is 120 rupees. That 20 rupees can be taken as a minimum alternate tax credit, and that credit can be reduced from your tax provision, but it has to be disclosed separately, right? So that MAT credit entitlement accounting is also one area where we normally make an error. Please look into that. Another point which I wanted to tell you is that whenever we are having a deferred tax asset or deferred tax liability, it is not a simple approach that 1 year I have recognized, so I will continuously recognize this. No, at each reporting period, I have to assess whether the similar environment will be applicable. I will share a practical experience with you. Whatever consideration we have done for certain cases where the company is estimating future taxable profit, and based on which they have recognized deferred tax asset in 2019. In 2020, because of the inputs which we are getting for COVID-19 situation, we are considering not to recognize deferred tax asset for the current period, as well as what was recognized earlier may be also required for a reversal because of the COVID-19 situation. So you have to keep that also as part of your point for coming to AS 22. In AS 26, the economic useful life and amortization principle, the standard says maximum possible is 10 years, unless you have a legal right to offset, to extend the period. So in other case, you have to apply 10 years as the amortization. But Income Tax Act says, if it is a computer software, it is also an intangible asset. It has to be added to the computer or maybe part of the block relating to computer, you are entitled for 40%, right? So we are entitled for 40% in respect of that particular computer software. Suppose if it is not computer software, any other intangible like technical know-how or brand which you have purchased, or you have purchased another business for which you have paid a goodwill, those items are considered as intangibles, but they will fall in a different block of 25%. So you have to be clear about intangible assets has been properly classified. Otherwise, you may make an error with respect to income tax depreciation computation. And coming to 28 indicators of impairment, COVID-19 is actually making always to think about whether anything has to be considered for impairment in the given situation, because future cash flow projections could be a challenge for them. And the impairment loss is not considered as a allowable expenditure under the Income Tax Act. So to that extent, that could be a problem. Again, what is the reason why I have to ask you to consider is that the cash flow projections is not backed by a complete plan. So you require to complete that particular investment in the fixed asset, which can be put to use, but it is under development. Even for running your normal business, working capital requirement is not available because of a COVID-19 situation. How you will be able to fund your product, project? So that is another important aspect to be considered for the purposes of determining whether any indicators of impairment is existing in 20 March as well as 21 March. And 22 March, we hope that there will not be any major issue. When AS 29 comes in, provisions has to be made in respect of a lot of items which was covered as per AS 29, where estimates are involved. A lot of, I should use the word, assumptions being used. Whether the assumptions have been properly supported by evidences, market-based assumptions, whether it is required to be done or not to be done. And in small and medium companies and small and medium enterprises, we may not have get into a constructive obligation. Sometimes some of our clients will be making a public announcement saying that we will take care of so much of the entire village which has been affected by COVID, and we will rebuild that villages, because that particular client may be from out of that village. If he has given that type of obligation, whether he can come out of that obligation or he cannot fulfill that obligation. If he is not fulfilling, there will be a reputation damage. So he has to necessarily fulfill that obligation. Even though it is not legal obligation, there is a constructive obligation which requires you to make a specific provision. That is one of the things which you have to consider. And finally, the 43B disclosure, whatever items which you are having should be reconciled with your AS 29 provisions as well. And only the last point which I wanted to touch upon is, even though we have not talked about Ind AS because it is not applicable for smaller and medium companies and smaller and medium enterprises, there could be a situation that the company which you are auditing is a subsidiary or associate or joint venture of a company preparing under Ind AS. In that case, that your client should also prepare as per Ind AS. That is the framework which you have to apply. So just to have a quick look whether it is required or not. That is one thing which I wanted to tell you. Now I will open the session for questioning in case if there are any. The way in which I have actually structured is that every question which you are having in your mind, we have actually considered. If there are any specific question, I will be happy to take that questions as well. Is there any questions which you asked me to? Thank you, sir, Gangaram sir, for your appreciation. This slide deck has been already given to your branch and they will be sharing as part of the background material. And the Excel checklist which I was talking about, once it's prepared, I will share with your branch, so that I always believe that the knowledge is for sharing with everyone. And maybe I'm missing something, you will give me an inputs on that. We will improve on that particular checklist also on a go forward basis. Okay. So chairman has confirmed that it has been already shared with all the people. Thank you, sir. Sir, if there are any questions, I will touch upon. And now it is 7:45. Whether MPV sir has joined or
Yes, sir. He is joined, sir.
Joined, sir?
Yes.
Yeah. Yes, sir.
Hi,
Then
Chins.
then you can give it to MPV sir, sir.
Okay, sir.
I will mute
Just-
myself, and I will be happy to listen to MPV sir now.
You just exit from the share screen, sir. Exit from the
I
share
will
screen, sir.
exit from the share, sir. I've done that, sir.
Okay, sir. Thank you. So friends, thank you very much, Chinnaswamy Ganeshan sir, for your detailed and excellent presentation on the accounting standards on SMEs, more particularly SMEs, because Vijayawada being Mafshal town, Mafshal city, I sincerely requested Chinnaswamy Ganeshan sir to talk mainly about the non-corporate entities or small and medium enterprises, so that everybody who are doing audits here will be benefit out of it. And now I request MPV sir, who is chairman for Accounting and Auditing Standards Board, a very prestigious committee set up by ICAI, and he's our chief guest today, because I told you in the beginning itself, because of the institute obligations in between 5 to 7, he has preoccupied, and then he has requested us to be part of us in the end. So I request MPV sir kindly
Good evening,
just
good evening, Srinivas
open
Garu.
your yeah. Sir. Good evening, sir.
Thank you for the invitation to be part of this program today. It's very well conceptualized.
Not visible, sir.
Not visible? Okay, just give me a minute. Just give me a minute.
GSR Garu, he was visible. He was visible, sir. Now,
okay.
Now that he has switched off his video.
Yeah. And I need spotlight lo pedadamante. And ledu main idilo and actually
no, I think
Yeah, I have done that.
Okay.
Please.
Okay, is the light, is it visible now?
Yes, sir.
Yes, sir. Good evening. Please go on, sir.
Good evening, Srinivas Garu. Thank you for the invite to be part of this 3-day interaction session. I think it's very well conceptualized. In fact, thankful to Prasanna for also coordinating this entire event. Exceedingly good job he's been doing. And I had the opportunity of listening to Chins for the last, Chinnaswamy Ganeshan is Chins to me, but so it comes to me like that. So Chinnaswamy for the last 7-8 minutes from ACE 22 onwards, I've been listening to him. As usual, he has this God's gift of articulating. So he articulates it quite well, and he constructs its slide deck very nicely in a very understandable format. Let me share my few cents. In fact, I would request the members to raise question and answers for interaction more. Chins has made this offer to respond. I would like to have more of that session. In fact, the good thing about this web interactions compared to a physical program is that people are actually asking questions. In fact, in a physical program, many hesitate to ask questions, but in a web program, they don't hesitate to ask questions. In fact, the only challenge is to the speaker actually, because most of the time it's like you're speaking to the wall, and people like me are comfortable maintaining eye contact, and without that eye contact, we do struggle to speak. Coming specifically to the topic on accounting standards, today we had an outreach program of the Accounting Standards Board on a new accounting standard which will come, replacing the present Ind AS 1, which deals with format of income statement. It's actually a transformational change. So we had an outreach program, and to invite some companies to also participate in preparing pro forma financial statements based on the exposure draft. So that's the reason I couldn't join at the start. As far as the accounting standards are concerned, I just want to, based on my experience of interaction with the industry and members in the last 6-7 weeks in particular, where many members have raised queries around very basic things like, can we avoid depreciation during this period of lockdown? Can we treat the expenses which are incurred during this period of lockdown as exceptional expenses? Can the inventory be valued at cost instead of NRV? So all those kind of questions have been coming up. In fact, I also had some wild requests, very, very wild requests, saying that, can we suspend applying accounting standards for this period also? And there are some who also came up with requests like, can we avoid going concern assessment now? Since we are all today here, who are all chartered accountant fraternity, I'll take the liberty of speaking a little openly. As far as the financial statements are concerned, they are supposed to speak the fact. They're supposed to speak the fact and not hide the fact. If the economic environment has a particular impact on financial statements, that impact has to be captured and communicated. If we don't capture that impact and we don't communicate, the loss is for every stakeholder, beginning from the management, bankers, other lenders like NBFCs and all, and various other stakeholders. These are times, it's almost like an individual being ill. If I'm unwell, if I don't tell that I'm unwell, it is unlikely that I can get a proper support or a medication. So if my financial statement does not capture the fact, whether it is relating to a going concern question mark, or whether it is relating to some expenses which have actually eroded my net worth, if I don't capture those things, then it is not practical for anybody to extend the support, because you are pretending to be somebody else, whereas the fact is something else. And within the institute, ministry, and national standard setters across several jurisdictions, everyone have a common view that in times like this, accounting standards should be more rigidly followed and not the other way around. In fact, we have had a standard by standard review, and we have found that the current accounting standards give enough guidance on how to handle a situation like this. Before I go forward, there's one remark which the chairman, Mr. Srinivas Rao, mentioned. And out of friendship, I will take the liberty of requesting him in presence of everyone itself. Most often, many tend to have this impression that the non-metros, metros are maybe 7, 8, 10, 12, whatever metros, are treated as mafassil. For some reason, as a professional accountant, having gone through the same accounting course, and practicing the same set of standards, the entity size can be largely 10 to 100 crore in a particular place. Other place, it can be 100 to 1,000 or 10,000 crores. But in terms of the knowledge level issues and all, it just doesn't matter. It just doesn't matter where a person is practicing or the entity is. So it just doesn't matter. So I would request that going forward, that word called muffisil get removed. Just like all along we thought cricket was monopoly of Bombay. In fact, my generation, we grew, we thought cricket was monopoly of Bombay. Then it had to require a Dhoni, and now we have people from various places and all. So as far as the accounting, audit, taxation, my personal experience, in all towns, there is enough amount of expertise and the nature of issues are similar. Maybe in absolute amount, the magnitude value changes, but the nature of issues remain similar. So coming back here, from the Accounting Standards Board, I would draw your attention in case you have not come across. We had issued an advisory end of March, where we have listed down a few of the issues relating to financial statements of 31/3/2020, and how to approach those issues in the accounting aspects. There's similar guidance available in the same advisory for audit aspects as well. I want to draw your reference also to two other very important documents. For accounting standards, we have a small publication called Quick Referencer. And for Ind AS, we have a similar publication called Quick Referencer. Both of them are very small publications, tiny publications, and they're very easy to have a good understanding of whether it's AS or Ind AS. In fact, Chinnaswamy was in the Accounting Standard Board last couple of years, and some of this referencer material was developed then, including a checklist for applying AS and Ind AS is available of the Accounting Standards Board web page in the publication sections. It's available, and request you to please make use of the same. Coming specifically to the accounting standards, just 2-3 questions. I'm sure Chinnaswamy would have covered this, but I would just like to draw attention to 2-3 points. These are developments which have happened because of COVID from the government. One is the loan moratoriums which have been given, consequent to which the loans, if they are not paid, should they be treated as increase in credit risk, and consequently, should an extra provision be done? So if the credit risk has not changed before the loan moratorium was made available, because the moratorium was availed, the credit risk position will not change. And in the context of Ind AS, we apply something called ECL and measure. Even for the non-Ind AS companies, wherever you have such kind of loans, you can apply the same logic. Second is we had this PM CARES contribution. If it is done in the month of April, May, June, for taxation purpose, you can consider it for the financial year 1920 as a deductible expense. So those kind of CSR contribution, since the amount is going out only in financial year 2021, there is no need to recognize liability in financial year 1920. You recognize the expenditure only in financial year 2021. But since you would have availed the tax benefit already in 1920, but you would pay it only in 2021, you need to create a deferred tax liability for 1920 and reverse it in financial year 2021. The last point which I'd like to update, which I'm sure many small units, small units would have availed this. We had this government scheme of entities having less than 100 employees, and if more than, not less than 90 people have less than 15,000 pay or whatever, those cases the employer contribution of PF is paid by the government. So such contribution by the government should be treated as a government grant and accounted as per AS 12 in the income statement. Or if it's an Ind AS entity, which is unlikely, then you have to apply the provisions of Ind AS 20. So these are three technical points. I thought I'll bring it to attention given the fact that it is a COVID-related item. I would also like to add one small request. I know it's tough times, and in Vijayawada, I understand lockdown is not of the same degree as what we are experiencing in Chennai or some other cities. But there is definitely difficulty in performing the audit work. My request is, despite the challenges, and we have this old cliche that necessity is the mother of invention, I would request that please find ways in which financial statements preparation can be completed and audit also completed. I know it's difficult, but I would still encourage that. Otherwise, we will all in some way become responsible for contributing to increasing risk for the banking system. Today, as a principal shareholder, as an owner of business, I know the position of the entity, but the lender who typically lends 2 times your net worth and all, and it's a huge public money, he does not know what is the factual position. So we are increasing the risk in the banking system indirectly. So please find ways in which the financial statements preparation can be completed and audits also done. And going forward, we all know digital is the way. We have to find ways to address the same. So with this, thank you for your patient listening. I didn't want to talk too much technical now. The Chinnasamy would have given you a full thali, full meals. In fact, it would have been a buffet spread itself. I've heard him so many times, so I'm sure he would have covered all the aspects. So thank you, Srinivasarao Garu, for having invited me to be present here. And I now leave the floor back to you. Happy to take any questions along with Chins. And I'll give him the first right to answer the questions.
So thank you, sir. Thank you very much. Really great thing. I'll take back my word.
It was out of friendship, Srinivasarao Garu.
Mofshell area and all.
Please don't miss.
All the knowledge is flowing very freely from everywhere, sir. The world is becoming a small village. Now that
in fact, you yourself are such a
knowledge is
knowledgeable
flowing
person.
very freely.
Srinivasarao Garu, you yourself are such a knowledgeable person. And out of friendship, I took the liberty of saying that. Because I somehow don't like people telling I'm from a smaller town, you know.
Definitely.
My view, all chartered accountants are the same, all the same.
I always pleasure in listening to you, and more particularly from the last 20 years, listening to MPV sir is really a wonderful experience for all of us. Thank you, sir. Thank you very much for gracing the occasion and making it as a grand success. And now I request Chinnasamy Ganeshan sir, if you would like to take some questions which are already there in the chat box.
I think yes, sir. I think there are 2 questions which is not covered by us. One question is
political party.
One of the question is in a non-corporate entities where the number of employees are more than 50, whether actuarial valuation is required. The answer is yes. I have already posted in the group. And another question which has come was in respect of political parties, whether accounting standards are applicable because they are non-corporate entities and they are covered by this. There is a guidance note which has been issued by the institute, which is guiding the accounting principles. And my suggestion is please look into that. And in case it is subjected to audit under any other law, then automatically you will be falling into the perspective of compliance with the accounting standard. And one question which is relating to whether video recording of stock verification can be an accepted method. I thought that MPV sir might have already talked about that, because one in earlier forum he has actually talked about using drone also for the purpose
you were there on that day, Chins?
Yeah, I was, sir. I'm closely watching you, sir, because I wanted to learn more and more from all good people. So he was talking about using a drone for the purposes of recording this, because it says that alternative audit procedure where it can be applied, you have to think about it without saying that I'm not able to do it. In fact, in one of the client case, I will share my experience that it's a Japanese company. They don't wanted to even comment on the CARA report saying that we are not part of the physical verification process. And to that extent, we are unable to comment on the physical stock available. So what they have said is, tell us what is the other way in which you will get the comfort. We told that, okay, we can take a stock verification today and we will participate in that. You do a roll backwards and tally that number, like what we do in bank audit. And they are happy to do that. And based on which we have only put that comment. We are not able to participate in 31st March, but we have done a roll backward procedure as an alternative procedure and ensured that the stock is available. So these are all the procedure in this particular unforeseen circumstances. We have to use it in alternative procedure, sir. Any other question? I will be happy to take in case anything is coming out.
I just want to add on to what Chins said that. In fact, the beauty of the audit standards, I think this is covered by 501, I think, SA 501. In fact, the standards itself have envisaged the situations. For example, there can be a situation of huge floods and a particular area is not accessible. So this is also something similar to the, except that it happens across the world. So these situations, alternate audit procedures are recognized. And those cases, how to draw comfort. You can also rely on your past experience. For example, I am the auditor of this company for the last 3-4 years. And generally, my experience of physical verification, etc., has been good. Now, this time when I'm doing, if I'm applying an alternate audit procedure, while on a standalone basis, it is one step lower than being physically present, I can still rely on my past experience, how it's done, other control aspects which are there. There are also others. There's also a small advisory published by the Audit Assurance Standard Board, where you can also look at engaging a local accounting firm to go and do the audit on your behalf, where you give the checklist, but you satisfy yourself how to do it. So all those guidance is actually available. In fact, there's enough guidance in the standards on these matters. The political party is not carrying on any business or manufacturing commercial activity, though they are subject. Yeah, okay. Ms. Chaudhary Tirupati Garu, as far as political parties are concerned, the accounting standards would still apply to them for the following reason. They do have, most of the political parties, they do have a very small commercial activity in terms of selling some things and making some money, largely for carrying out the activities. They sell some flags, whatever kind of publications, etc. They have a tiny commercial activity which itself draws. Irrespective of that, as Mr. Chinnaswamy Ganesan mentioned, there is a guidance note of the institute available, where if you are not following the accrual method and all which is required in the accounting standards, you can still follow the cash method of accounting and follow it. But my experience, I've gone through almost about 40 political party financial statements while doing the review of in the FRRB. Almost all of them have some small economic activity which is there. Maybe newly formed parties, nascent activity, they may not have it, but all others generally have it, sir.
And that is what exactly we have discussed also. In a non-for-profit organization, if a portion of the activity is having commercial or industrial or business activity, they are subjected to audit, means they have to necessarily undergo the accounting standard compliance. So same logic is applicable. In Tirupati's sir's case, he is saying no portion is having commercial or in that case, you have to necessarily apply guidance note. But it may be very rare circumstances, as MPV sir is mentioning. They will be having some commercial activity or business activity, which is funding their party itself. There are no other questions as of now, sir. It's more of appreciation for you and me.
No, Chins, you have covered it so exhaustively. I'll be surprised
Really?
somebody having a question,
In fact, what we have done is, sir, we ourselves have asked the question and answered the questions. That's the way we took a frequently asked question and what would be the possible issue. And we have answered that with examples. That may be the reason why they are feeling that it's comfortable.
If I can just leave one word of
Thank you,
advice.
sir. Thank you very much. And
Srinivasarao garu
everything is good.
Srinivasarao garu, ఒక్క నిమిషం అండి. I'll just take one small advice, particularly for younger members. Please don't mistake me. Please don't mistake me. I'm sharing this out of interest, who are in practice and who are doing a test function. While signing off on going concern for small units, 30 crore turnover, 20 crore turnover, 50 crore turnover units and all, going concern assessment is a very difficult one. Many of us would not have had an opportunity of assessing it in the past. I would request, please don't hesitate to take the advice of senior practicing members in your area. It requires some amount of gray hair or hair to be lost, and you should have actually seen it 3-4 times in your life to understand how a going concern situation can be. It cannot be assessed based on spreadsheet. On spreadsheet, some of these will look justifiable. We should not end up with a situation like, as of July, August, I sign, assuming it's going concern, and within 4 or 5 months later, because the situation is so uncertain, something goes wrong, and you would have to give an explanation. So my request on going concern, please be extremely careful. Please don't hesitate to take advice of senior members. Please don't hesitate to take that advice. So sorry, Srinivasarao garu, for interrupting, and over to you. And thanks once again for the opportunity to be here today.
Thank you, sir. Really, that's a good suggestion, sir. But more particularly in the COVID situation, where our businesses are severely affected. So going concern concept has to be addressed in a correct and proper way, sir. That's a really a very good suggestion from you, sir. Thank you very much for the for the gracing the things and given the knowledge upliftment and all these things. As a customary thing, I request our branch secretary Shita Shiri ma'am to propose a formal vote of thanks. Thank you, ma'am. You have to unmute, ma'am. Unmute. Yeah, thank you.
Thank you, Vijay Kumar sir, my guru, for giving your valuable message and spending the time, your valuable time, and gracing the occasion in spite of your busy schedule. Sir, whenever I listen to you, always you make cautious to us in preparing financial statements. Really very thankful to you, sir, because and it is. It should be done like I feel like as a teacher tells to their students and make cautious. I feel also like that only. And thank you so much. And I thank Chinnaswamy Ganeshan sir for enlightening us and updating us accounting standards with so many practical examples. And it's a very excellent presentation, sir. Thank you so much. And I thank all the participants and other members for your valuable, you're spending your valuable time. Thank you so much.
Thank you, one and all. And it's a small reminder that tomorrow is going to be the Code of Ethics by Ethical Board Chairman Commissioner Soni ma'am about the new Code of Ethics. And also Chandrasekhar Vaidya sir will apprise about the main procedural aspect of the disciplinary committee and with practical examples. I request each and everyone to kindly join. And the day after tomorrow, Joman K. Judge sir are presenting standards on auditing for more particularly for the year 2019-20 year, and he has taken a much pain and in preparing a very elaborate a PowerPoint presentation. And thank you very much, and kindly join for the tomorrow and day after tomorrow meetings. Thank you very much, sir. So nice of you. Thank you.